Hello everyone. Good morning to all of you and welcome to ALD6 session. So this session would be a little bit, we have tweaked it and we squeezed in between the June and the December time frame, and a lot of people, new faces have agreed to present this time. So it's our benefit that new perspective will come into picture with that. Along with that, we have some experienced people like Amar, even Mithun is there. I would also be presenting one of the sessions. And it is split over 2 days, today and the next Sunday, 4 to 5 sessions each day. That's it. And each session will try to figure out within like 35 to 40 minutes. And I would request participants to possibly hold on to their questions to the participants if they want to ask in person by the end of the session of that person. Or in between the session, you can put in the chat, Zoom chat itself. We will be able to take up the questions there also. That is fine for us. So we'll keep it short and sweet and we'll jump onto the presentations. And I will hand it over to Amar directly. So Amar would be the first presenter for us. Thanks, Amar, for taking this up in every ELD.
Thanks, Puneet. Pleasure is all mine. So I'll start sharing my screen.
Yep.
So you guys are able to see, right?
Yes, it's visible and you're also clearly audible. We can start.
Okay. I'm just trying to figure out these participants. Okay. Because it was covering up my screen. No, I am not. Okay. So I'll start. Just give me one. I'll try to be conscious of the time this time. And hopefully within 35 minutes, I should be able to give a fair enough thesis of this. Okay. So let me directly jump into the presentation.
Hold on, I will put on mute.
Okay, so let me give it another try and I'll start again. So I'm today going to present on creative graphic solutions. Creative graphic solution is started as a pure pre-press kind of manufacturing unit. When I say pre-press means they create flexo printing plates and all, and which is used in the packaging materials and all. When we look broadly at the industry, there are two types of printing solutions. One is the flexo, where within India on the organized sector, creative graphics is the largest one. The other one is gravure. Gravure is the one which has predated flexo, gravure printing that is. But there the issue is they use multiple layers and then there are metal blocks and all. So basically it is a bit cumbersome to from a setup point of perspective. Second thing is from an environment sensitive perspective, since it's multiple layers, it's not easily recyclable. So it goes against the EPR norms. So when I say EPR norms, it is nothing. EPR, you will hear this word a couple of times in my presentation again. EPR is nothing but extended. People need to go on mute. Thank you. So EPR is nothing but extended producer requirement, wherein as per the norms, previously what used to happen was like there were recycling companies and this is the way the industry was going, where the onus was not on the producers. With this EPR norms, the manufacturing unit itself has the onus now to ensure that the recyclable happens in a very efficient ways and all. So this is something which is becoming a norm as we progress day by day, and that is where flexo printing kind of takes up the major line share away from the gravure, and that is where many of the manufacturers they are kind of shifting to flexo printing, and that is where creative graphic solutions get a tailwind there, because that is their forte. And like I said, within India, when we talk about the organized sector, they are one of the largest ones. Having said that, I have kind of like briefly given, and looking at the time, I will not step through each and everything of the presentation because end of the ALD Puneet anyway shared this presentation. So we will all of you will have access to this, but I will highlight some of the major points. So Creative Graphic Solution, it was incorporated in 2014, and that time they were hardcore into flexo printing only. And flexo printing was their bread and butter for quite long time. Then sometime in 2023, they CGS acquired another company called Waren, and they made it renamed it as Waren India Limited, and that was into pharma packaging. So this was a diversification. Before, from a packaging perspective, CGS, if we look at it, it was more of an ancillary to the packaging because they created the different flexographic plates which was used in packaging. But with the acquisition of Waren, they went into the packaging and more focused on the pharma side by themselves. So they became, that is how the diversification happened. And as we uh, go and see forward, like I will, there is another slide dedicated to it. The management is very proactive. They are looking at the industry norms, what is happening within their industry, and where they see an opportunity, they do their due diligence, they do their homework, and then pounce on the opportunity where the synergy is there, but it might be a totally new subdivision itself. But kudos to them. With Warren, they made it a success, and there is another opportunity which will be coming in, which I'll be covering it in the further slide. So to tell very briefly, it was CGS was incorporated in 2014, but today they have 8 plants across India. Recently, they have opened another plant in Oman, and the latest in India was in Bangalore. From the expansion perspective, even though the CGS got listed somewhere in 2024, April 2024, but then the growth of these different locations, it is more driven by the fact that they want to be near the customer, so the turnaround time is very minimal, and they are able to cater to their end clients with the quality, which is kind of like seen on the large box here. If you look at the differentiated offering, speed is one of the thing which they are looking at. They usually try to do a 24-hour turnaround time, and till now they have been successful, which is kind of shown by the fact that they have now 4,000 plus customers within the industry. And the rest of the things are there, but one thing which I would like to highlight, like I said, CGS is open to new opportunities, and they are kind of like latch on to like wherever they see a growth factor coming in. So first, down below, I have just kind of given a representation what they're into. So flexographic plates was their main bread and butter, and that was their 100% of the revenue for their most of their existence. But now the kind of game has shifted to pharma packaging, and that is where Warren Limited comes into play. And Warren Limited, one of the example which we have shown over here is alu foil. Pharma packaging and then alu foil, all these names look exotic, but then if we look at it, it is nothing but most of the medicines which we take, and we are very aware of how they have been packaged. So when we say alu foil, it's basically laminated aluminum foils with a recess in between where they can keep the medicines and all, and it extends the shelf life period of the medicine, as well as like it keeps the moisture and other things out, so that the medicine doesn't get contaminated and all. So that is where the focus in there, and that is where they are getting uh, the revenues out from. So Warren, it was acquired sometime in September 2023. By the time they incorporated, and the whole industry kind of whole subsidiary kind of got up and running, 2025 was the time when they started out. Actually, they started out to 15 months back, they were at 0% revenue contribution, but today if you look at it, War in India is contributing almost 55%. So they have already surpassed the flexographic plates. One reason for that is flexographic plates, it's more like India focused and domestic business, whereas Warren, by design, the management is focusing it to be a export heavy business. At this time, at this point of time, major business is still domestic, but they have already made inroads into Middle East where they got the first order. And credit to the management, they are going to different expos in Jordan, in Middle East, and other places. So they are targeting those markets, and that is where their focus is. And in the earnings con call, they have given their aspirations that to start with, Warren should within a year should at least have major contribution, which has already happened on the top line, bottom line, but the export should kind of ramp it up to 25%. And export business being export business, when we go there, they will at least have a uh, plus of like 5 to 6% on the operating margin front. So that is where the focus is. The third part, which you see the mock-up design, that is part of the CG Premedia. Premedia is a very niche offering right now. It is kind of testing waters. They have already been in the business for 2, 3 years, and they have, frankly speaking, got a good client share there also. But right now, from a revenue contribution point of view, it is still in the nascent stage. And the management in the con call has very clearly mentioned that it is not the wallet shares which they are focusing on from a pre-media perspective, but more of an iShare. What do we mean by iShare? With the pre-media offering, they want to get their foot in the door for different companies, so that once they get their foot in the door, then they can do cross selling. So that is where the focus is. And in within pre-media, what they do 3D mock-ups. They go with the designing aspect, like the example I've shown on the right bottom corner. Same packaging, they have come up with different kind of like uh, graphics and all, to say which one is more appealing, what we finalize on. So this is more kind of a prototyping phase, where with the client they will do the brainstorming, come up with new design, what kind of packaging needs to be used, what kind of font and other those kind of aspects. So that is where the mock-up designs and everything, 3D digital printing, other things will come into play. So for now, we have these three revenue streams: flexographic, which gives almost 40% of the revenue. Wherein India is already at 55%, and that too May 2025, that is first half of 25, the capacity utilization wherein was only 50%, and those are the numbers which they were contributing. By June 2020, the third quarter, basically Q1 FY26, the capacity utilization has gone up to 75%, and by year end they are expecting it to be 80 plus percentage. So us, and when the capacity utilization goes up, the it contributes to both top line, bottom line, as well as being export focused, the margin also will get increased. I'll move on to the next slide. I have been presenting different companies into the ALD series. This is the first SME company which I have kind of picked up. I kind of latched on to Puneet's one line directive saying this time we will go for micro cap and less than 1,000 crore kind of company. This is where my focus came onto this one. The problem for me picking up a SME company and kind of presenting, at times the information is very scant and you really have to dig through. And if the information is scant, then your focus more goes on to the management side and all. In fact, like this is my first presentation in ALD where I have a slide dedicated to management. And the fact is that because SME being a micro cap, CGS is 500 crore company only. So there we have to look at the jockey and see how they are driving, what is their intentions, how they have been doing in the past, and whether they are walking the talk or not. And there, like Dipanshu Goyal, who is the managing director of Creative Graphics, he has come out with flying colors. He started this company. He has like about 25 plus years of industry experience. And he initiated this company, formed this company with just 35,000 rupees initial capital. And over a period of time, it has already been ramped up to 500 plus crore market cap. And in spite of all this growth, hyper growth, and all the debt level and other things, they are still in control, which speaks volume for the execution control that Dipanshu has shown and his vision. And like I said, the management of CGS is aggressive, and when they look at opportunities in the industry where they think they can contribute and they will make a meaningful contribution, they do the due diligence and then they go all in. Warren was one of the example where they kind of diversified into pharma packaging. And today within India, like they have about 16 to 18% of market share. And with the upcoming capex for wire in India, where they are going to increase the capacity almost like 2.5x times. Currently, they are at 8,000 metric ton, and they want to ramp it up to 20,000 metric ton by year end. So that 2.5 increase, and then the margin being heavier on the Warren side, this bodes well for the whole company. That is where, like I said, it's strategic vision as well as execution excellence. When I say execution excellence, we will talk about the numbers and all, and that has come out greatly and speaks well of the management. On the bottom left side, I have kind of just mentioned the board of directors. These are all senior personnel within the industry. I just try to focus on Dipanshu Goyal here while speaking, so that keeping in mind the fact that time is of essence here. On the right side, I have given certain instances where I have highlighted in bold like what I think was their management property which came into the fore when they were doing this. So IPO proceeds. This IPO came somewhere in April 2024, and the IPO size was like about only 55 crores only. But the 55 crores, they are so judicious, they have not yet utilized the full amount. I think it is now 50+% which has been utilized, but they are keeping that cash ready, which can be used for inorganic acquisition or like for any other capex plan that they might have. When we look at the con call from the management perspective, they have very clearly said that they want to double the revenue every year going forward, which is an aspiration. They very clearly mentioned that it is not a guidance. So they are ambitious, they are aggressive, but at the same time reasonable. I would say that because I will two slides down the line when I look at the financials, 24 to 25 they have achieved like almost like near 100%. So every year when they say that seems to be reasonable, but we need to see some September 2025 when they come up with the second half results. That time we will see like how the things are progressing. But at this point of time, they are walking the talk. Then we have cited some instances of good corporate governance as well as like operational like excellence, which is showing up in the results. I'll move on to the next slide. So this is the financial performance I was talking about, and I will focus just on the March 24 and 2025 all figures. Why? Because that is where Warren came into play. Before that, like I said, it was just focused on flexo printing. Flexo printing, even though they are the largest in India, there was a limit to the growth and all. In spite of that, it's an impressive growth of almost 40+% each year on year. But March 2024, if you look at it, revenue is 132, and 2025, if you look at it, it is coming to 250. So it's almost double. That is what they are aspiring to. And coming at the new optionality, I think this is going to sustain for at least like 2 or 3 years going forward. I will, when I talk about PVDC as an optionality in the further slide, I will come back to this. Why I say that this can be, this 100% growth year on year is doable. But being conservative, even though management that said they want to double the revenue every year, I am kind of taking the run rate as like let's give them 2 years to double the revenue, and if they achieve that, even that will be fantastic. Moving on to the next slide. This is the optionality I was talking about. Warren, they have already made a success. The first paragraph, if you look at the top here, I am kind of dedicating it to Warren because I want to reiterate like how they have made Warren a success. So they acquired it in September 2020 is a typo there. It is September 23 when they acquired Warren. Warren started with 0% contribution in 23, but within 18 plus months, it's now almost 55% to 60% of top line of CGS. And their aspiration is that the export contribution should ramp it up to 25%. Currently, that is not a certainty. That is what they're aspiring to. But they have already got one big order from Middle East. So going by the past, it looks doable. But that 25% is a aspiration. So we will see if they achieve that. It is going to bode well for them because operating margin kind of takes an uptick. So does the top line as well as the bottom line. Coming to the PVDC aspect, what is PVDC? PVDC is part of high barrier packaging, they call it. Why? What is high barrier? Apart from the aluminum foil, they use it this PVDC as a kind of like an insert, which is very slim and all. But then it's a very high barrier again, gases and water vapor. Why would we need that? Because can have different applications, right? Pharma packaging is obviously is their forte, so that is where it will come into play. But apart from that, industry-wise, if you look at it, food packaging is another which I can think of where this will be of much more use, where the shelf life of the food package will be increased like anything. So this is where we are looking at what is the difference between PVC and PVDC. PVDC in a very simple and dumping it down, it contains twice the chlorine content, and because of that, it gives superior protective characteristics. These are the numbers in the May 2025 con call which management had mentioned. Their monthly capacity is going to be 1,000 tons, so annual capacity by deduction will be about 12,000 tons. Currently, when we look at it, average selling price is going to be 250 per kg. What is the revenue potential? Revenue potential is almost 300 crores annually at full capacity. Full capacity will take some time. Please mind that, because 25, when we look at it, Warren kind of like ramped up the utilization. First quarter, it was like from 0 to 15%. By second quarter, they hit 50%. Now, third quarter is where they are come to 75%. So it will take time. But at full capacity, we are talking about just 300 crores from PVDC only. If I had to take one step back, March 2025 revenue here, if you look at, is 250 crores. If PVDC becomes a success as the management is planning it to be, we are talking about 300 crores addition to that, and that is where I'm saying in next 2 3 years, this 100% year-on-year growth seems possible if everything goes as per the plan and the industry supports them. See, there will be many moving factors, variables which will come into play, the macro conditions and other things. But if it goes to the plan, it is doable. That is what I'm talking about. So we'll keep that in mind. And what happens since they are already into the pharma packaging, they have taken 18% of the market share. There is a cross-selling opportunity also, right? Because they are already got captive customers who are using their pharma packaging products, the alolo foil, the blisters, the CR foil. CR is nothing but child-resistant foil, which they call. Again, this is a very big thing in pharma packaging, wherein the packaging should be in such a innovative way that the adult can use it. For example, it can be a cap, or there will be a certain way of opening a medicine. The adults can do it easily, but a child will not be able to do it. That is what kind of like goes in favor of CG. They are a CGS, they are a big player over there. Another thing is with alu foil and the fact that CGS already big play into this flexo printing, they also can create the packaging in such a way that the counterfeiting of that particular medicine will not be that easy. So going from the fact that EPR is demanding flexo printing, the pharma companies, manufacturing companies, they also get advantage that the counterfeiting is also kind of taken care of the way the medicine is being packed. All kind of bodes well for CGS, and that is where this business is booming, right? This SWOT analysis, like what has happened is this has become a bit crowded because like I said, finding information on CGS was a big ask. I had to take help from AI and like dig through lots of materials. So whatever I could think of relevant, I have put it over here. I will not go through each one of them because, like I said, this presentation will be said you can go through. But on the strength side, some of the key things which I mentioned, it has 8 plants as per like customer locations, and pan India distribution is there. At this point of time, they have got into long-term partnership with technology leaders, both from the vendors side also and client side also. Why we need the vendors that way? Because some of the machines, they have to be high tech and the technology advanced, so that the uh, how do I put it? The wastage is less, the output is very fine. That is what should be the focus on. They are working with the leaders in terms of DuPont, Kodak, and Co. These are the vendors who will be providing the machines to them. We already have talked about three different revenue streams, so I will not get into it. From an export perspective, for Warren, they are kind of like get their foot into Middle East as well as Jordan and South African countries. From a flexo printing perspective, they already have clients over in Africa, Middle East, and Southeast Asia, including Nepal and other immediate neighbors. So that is how things are there. On the weakness side, their the working capital is bit intensive. The receivables are like approximately 130 days, and inventory is kept for 54 days. Why do they have this inventory of 54 days? Because many of their input materials, they are imported. And looking at the macro noise, the way world is today, and the impact it has on the global supply chain, they do have those warehouses, and that they kind of like have certain amount of input materials which they kind of store just in case of any eventuality. That is why you see it a bit on the higher side. Hopefully, as the noise subside, world come back to the normal, we might see an improvement over there. Client concentration is not a weakness now because of the Warren diversification. Initially, there were like top 10 clients were contributing a lot, but today when we look at it, even the top client is less than 10% of the revenues now. So that risk is being kind of like mitigated. But they are getting into the backward integration, forward integration from both perspectives. They are very conscious of that. And that is also kind of contributing to the margins as well as the execution parameters. So opportunity wise, as I told, Warren India, so pharma packaging is a big area which they are exploring and kind of like trying to get more market share both domestically as well as like export. Now PVDC is another opportunity which can kick in big for them. From threat perspective, like I said, raw material price, obviously polymer resins and aluminum and all those are the things which are which can put pressure on the margins. In the past, when we have looked at it, like in spite of being a small SME company, they have been able to pass some of the costs, so it has not shown up on their balance sheet as of today. But that is something one which has to be aware of. Then we, like I said, because of the macro noise, the global supply chain, we need to figure out what is happening over there, because that is something when it comes, it can increase the cost like anything, especially for a small company like CGS. So that is another threat which can come into it. One of the things which is a risk which usually might not arise, but then one that can come to mind is customer attrition risk. Why do I say attrition risk? Because large brands, if you look at it, they have the wherewithal to kind of do things internally so that they have control over the whole the supply chain of theirs where they can do in-house. That is a bit far off, I think, but at least it's a threat. If it happens, that is going to happen. One thing which has worked out in favor of CGS is the EPR, which I talked about before, EPR for plastic from a recycling perspective. It's a regulatory overhang, right? Tomorrow, some new rules come in, and where if CGS is not compliant or it has to be compliant in another by doing things differently, it's going to be a cost which needs to be taken into account and all. So that becomes a threat. So, like I said, I was just wanted to give you a brief snapshot of what things can come, what are the threats, what are the weakness. You can go through the major points and then once you get the presentation. So questions can be at the end of this presentation, but within the group, even afterwards also. Having said that, I'll move on to the next slide now. We are talking about the risk here. Again, I already talked about the customer attrition risk, because if they insource and it's going to be a risk. Macro risk, there will be a slowdown in packaging and markets, which doesn't seem doable at this point of time, but that is how risk, like unless it materializes, everything looks far off. But that is one risk we again look at it. Input raw material, there will always be a risk there, and we have to hedge. The company has to be nimble and kind of like take it accordingly. But since it's an input raw material, it can have a overall impact on how things are being executed and delivered and the margins and all. So that becomes a risk definitely. Regulatory risk I already talked about. Anything changes in the APR norms. CGS will have to adapt, and there will be a cost to it. One thing, management benefit, which I kind of want to focus on, they started off with Flexoprint. They got a good market share. They are the largest in India right now. Now they have successfully diversified into pharma packaging via Varan. But now third optionality they are coming out with is PVDC. And pre-media is already a sector, another, it's not a revenue stream for them, but that is one they are focusing very actively on because they want an ISA. They want uh, break how do I put it? Get their foot into the door with the new customers. When we look at it, this is for a small company. This becomes like 3, 4 full-blown subsidiaries, and that is where the management bandwidth can come into play. Right now, they are executing, which is reflecting in the numbers. We will have to closely monitor the quarterly results and see how they are getting into it. Currency fluctuations, it goes with, like, if you are aspiring for export, obviously the currency fluctuations will come into play, and we need to see how they mitigate the risk over there. Capital allocation, it has been prudent till now, but now they are expanding into different areas, and with their aspirations for exports and other, it will cost money, right? They have some capital in hand that will not suffice looking at their aspirations. So we have to figure out going forward how they are doing that. Are they doing equity dilution? Is it a debt? If it is debt, whether it is in control or now, how prudent they are. Those are the things that will need to be monitored. So this is from the risk perspective. I have kind of like briefly, again, I will not step through everything, but this is a earning con call snippet, which was done in May 2025. On the right side, I have kind of highlight the area where this snippet kind of puts into. I will talk about, I wanted to highlight one where they talk about the growth rate, right? Yeah, last one if you look at it. But from an overall trend perspective, we would like to state that yes, we are looking to double our top line year on year. Like I said, the management themselves have very clearly said it might not happen every year, but that is the trend we are looking to follow. And they mentioned that it's an aspiration, it's not a guidance. Being trying to play safe over there, even though management is aspiring for 100% growth year on year, I am kind of saying even in 2 years, if it doubles, that is going to be phenomenal. That is what we should be looking for, monitoring the results on a half yearly basis minutely and see whether management is walking the talk or not. So coming to the technical analysis part, since this was an IPO in April 2024, we don't have that much of a data point. But this is what it looks like. Before proceeding on to what I am kind of trying to showcase here, one thing which you will see is there is a VCP pattern also which is coming into play. This is the bigger like curve, and then this is the second curve. After the second curve, the breakout has happened. So we will see. But VCP is a pattern which is kind of like seen over here. This trending line, what I have put over a period of time, this is kind of like acting as a resistance. So this has already broken out somewhere here. But after the breaking, it kind of retraced its steps, and then now actually the breakout and the thing is happening. And if we look at it on the crossover front, it is confirmed over here. The golden crossover happened. And in down below, what I'm doing is I'm checking the relative strength. This is I have kind of marked it against the Nifty Microcap 250 rather than small cap or anything else because it's a 500 crore market cap company only. But there also that particular trend is positive. It's on the green. It's on the upside. So this is where I'm kind of like hopeful. One thing is from technically things are looking to support what we have. I have given the thesis from a fundamental perspective. The breakout happened here. It kind of retraced, but again it kind of and the golden crossover happened here. It is still kind of not running away. It is still in a range, but this is early days. We will give it probably 2 months or so, and then the S2 results when they come sometime. When we look at the S2 result, that is where we should get the kicker. But overall, the momentum is picking up, I think, from a technical perspective. This is how this chart looks to me. This is how I'm interpreting that. Right? I'll move on to the next one. This is my concluding slide, and here what I'm trying to do is like a salient points which I talked about. I'm kind of last minute revision kind of thing, right? Are we focusing on CGS now? Because the execution parameters are very good, 51.2% revenue CAGR and 73% from FY21 to 25. Revenue, they are going saying they can still increase this up and looks doable because of Warren and now PVDC. Here we talked about they started as a very small company, right? 35,000 capital, and now they are into diversified packaging solution. They are a big player over there. They have got a good market and iShare over there. Current market cap from 35,000 to 500 plus crore is an exceptional growth trajectory. They have got a very clean capital structure. When I say clean capital structure, in spite of having like Warren Limited and Pre-Media, these are the 100% owned subsidiaries. But there are no, till now, till date, when we look at the reports from the auditor reports and all, there are no hanky-panky or something which kind of stands out as a red herring. All the financial parameter within subsidiaries, it's very clean and kind of well given by the management and well supported by management. They have been very upfront about things happening and all. They have got EPR compliance tailwind with them. And they do go for strategic acquisitions. When I say strategic acquisitions, not only like it's an acquiring a new company. Warren was a acquisition that was which was very strategic, but they are also very prudent. For example, some of the machineries which goes into multiple crores and all, right? Last two machines which they acquired, it was from another company which was in NCLT. And why they acquired from that company? Because they got it at 10% cost of like what was the actual cost of the machine. So that again is a plus point on the prudent side of the management. War and capex, they were very upfront saying there was a delay in the way they were envisaging things, but by end of 2025 things will be online where they will ramp it up to 20,000 metric ton. 8,000 से 12,000 already हो चुका है, but by end they will ramp it up to 20,000 metric ton. And the utilization they want to ramp it up to 80% plus utilization, which will kind of contribute heavily towards both top line and bottom line. PVDC is an opportunity which is waiting for kicking in. This is what is going to happen. We need to monitor and see whether those numbers are reflecting into our quarterly reports or not. Geographical expansion, we already talked about. Oman में facility already आ चुका है. Which they are kind of thinking of as a gateway to Africa and Middle East. Export growth, their aspiration is Warren should contribute 25% of sales as an export business. That way. This was my end slide. So my end of my presentation. I'll stop sharing here and open to questions.
Thank you, Amar. Great. And you met your time also this time. Great.
I was so conscious of the time this time, Punit. You will not believe I put a timer here and glancing there in between. Yeah. But I need to get that discipline into myself.
Okay, so the first question is possibly I think Farshad is saying that alu foils are doing really well. I think GSM foil is also doing that. Apart
Yes.
from that,
Actually, that was going to be my bonus offering at the end of the presentation when all the
okay,
question was done. I have already taken my first lot into GSM foils. It is
okay,
in ESM, and because of that, the price is, I think, artificially curtailed. But GSM, if you look at the chart, that chart is phenomenal. And they are also into this alu foils. So
yeah.
GSM foil will be my bonus offering. But
So,
I still need to do due diligence over there. The way I have done it for CGS, I have not yet done for GSM. But I already, me being me, I'm very optimistic. So I don't wait. First lot to मैं ले लेता हूँ. Then I think about it. So this is how we stand.
so that would be competitor for this company, right?
Not fully because they are into this flexo printing plus PVDC and other things. No, in a way,
Mhm,
yes, it will be. Even Uflex does some part of it, I believe. So
mhm.
Uflex will also be a, but Uflex the financial numbers are not up to the mark, even though it is such a big player.
Okay. Yeah, so that was the one question which I figured out. Any other questions? Participants can unmute themselves and ask.
So, Amar bhai, Farshad here.
Hey, Harsad, hi.
How are you? Good.
Good, man.
Okay. No, no. Just on GSM foils, very good company. So yeah, I mean, as soon as you started presenting, that thing came into mind. So yeah, first of all, thank you. Great presentation, very clear. GSM में advantage ये है कि promoter interviews वगैरह data वगैरह भी है. So whenever you start doing research, it will be very easy to understand. But thank you for creative graphics because सुन के अच्छा लगा कि aluminium foils में मतलब दूसरे players हैं and they are also registering similar growth. So yeah, if you happen to study GSM foils, we can connect separately and share notes. Just wanted to say that. But overall, great presentation. Thank you.
Thank you, Harsad.
Add me there, Farshad.
No, we'll do that in group only. Everyone should benefit by that.
Okay, so some of the questions would be like SME or this one. So this ALD is more towards the small companies. So just learn it. Maybe if you are not able to buy it, that's fine. But at least that gives you a heads up on when you are able to buy, then what you should have to look basically. Okay, that's all I think we have, Amar, for the time being. Thank you.
Yeah. Thanks, Punit. Like Punit has mentioned, any question that comes later on also, please share in the group so that we can learn together and kind of solve it together.
Okay, then we move to the next presenter. And I think it's Sunil.
Yeah.
Yeah, Sunil.
Am I audible?
Yeah, just a second. Rishi, you have some question, please ask.
Yeah, hi. Thanks for the opportunity and very well presented, Aman bhai. One quick thing, the acquisition of this Warren company, right? So, any idea at what valuation did they do it? Any idea?
No, those kind of information is since it's SME and kind of uh, less than 500 crores, right? Those information not very forthcoming per se. But then when
Okay.
you look at the Warren numbers and how they are contributing, like I said, within 18 months, what they've done is 0% contribution to top line to and bottom line. They have now started contributing 60% to the top line. So, and it was a very pivotal step where CGS was big into flexo printing. With Warren
Hmm.
acquisition, they got a foot in the door for the pharma packaging. पहले वो क्या
Exactly.
था pharma packaging का ancillary company था because it was only on the printing labels and the way that things are kind of like impacted on the different medicines and those kind of thing, right? With
Yeah.
Warren acquisition, they have got into successfully into a diversified stream where they are now into pharma packaging itself. And obviously, the next logical conclusion is get PVDC into play so that they build upon it. So this
Okay.
different work streams, na, they are very synergistic, and that is where
Hmm.
the real value of Warren acquisition comes into play.
Okay, got it. Yeah, thanks. On the follow-up question, this PVDC line, this purely an organic growth, right? Or is it that they're going for an acquisition for PVDC as well?
They are open to acquisition, they have said, but they have not mentioned like something is actively in their side. And like I said, acquisition not necessarily has to be a company only. Warren, they saw an opportunity, they acquired and successfully brought it up as a different revenue stream. But then they are using it very prudently in acquisition of machines and other things also. That also can be thought of as inorganic, where they are going to NCLT and buying it for pennies instead of a dollar, right? So those are the things.
Okay.
PVDC again, they are open, but I think they have already the whole manufacturing plant and other things in place because they are
Yeah.
already thinking by end of 2025 they should hit that run rate of 1,000 per month kind of annually to 12,000 kind of. So those things are already into play now. It's an organic thing within they have developed.
Okay, got it. And all because I was asking why for an acquisition or an organic growth, because right now the cash flows are negative, right? So they more or less have to raise money for them to either acquire or expand. So what exactly they are looking for, that's the thing I wanted to have a clarity because right now it's
Yeah,
cash
yeah.
flow operating negative. That's right.
So there are two ways to look at this, right? One is the cash flow, which is being hampered. That is because of the nature of the business. And like I said, looking at the turmoil in the global supply chain, they are also kind of at least 1 quarter का जो उनका input raw materials होता है in terms of polymer, resins and aluminum, they are storing it, right? That will put burden on the balance sheet. That is where the cash flow is negative. But on the good part, they are still prudent with their cash allocation because IPO का जब आया था, it came almost like April 2024. 55 crores का IPO था, उसका 50% ही उन्होंने spend किया, 50% is still in the bank for as an ammunition.
Okay, so
So
that could be used for the other acquisitions.
correct. And looking at their aspirations and the way the capex is coming up and all, that is going to be used up pretty soon. So that is where we need to monitor. Since being an SME, we need to see how they are getting on this hurdle where they want cash. Are they going for equity dilution? Are they going for debt? Whether when they take debt, what is the debt equity and all? Those are all things which has to be monitored very minutely.
Yeah. Okay.
Yeah. So
Okay.
we'll keep
Got
that
it.
in mind and we keep on monitoring their half-yearly results and see what the numbers are speaking to us.
Yeah, makes sense. And also, just on the last question, on the raw material front, are these guys, facing any sort of raw material issues because of the supply chain things happening all over the world? Are they able to find it easily on
Uh,
the domestic market? How exactly is it? Is it
no,
fluctuate the
it's
margins or
a
what?
major thing is still an import, I guess. And what they're trying to do is they are just being proactively trying to be judicious about it, where they are kind of taking the load on the inventory and all. But as of now, there is no disruption per se till now. So there is no within the concon also that was not mentioned. But that is something which they are kind of wary of and they are trying to be on top of it. Like I said, some of
So,
the things they are kind of like doing that backward integration and forward integration also. They are within flexo printing also, they are trying to do that. So that is how it kind of like shaping up. But
so is
as
it a
of now, it is
cost?
not a red
Yeah,
flag
yeah.
which has the risk has materialized. It's not that case.
So, so is it a cost plus model for them, or how exactly is it? Because let's say, for example, last year or something, if we see copper and aluminum prices have shoot up like anything because of whole global supply chain issues. So, the end of the day, aluminum is something that's, of course, they have entered the pharma space right now. So, aluminum is one of their key raw materials for the product. So that in a way impacts their raw material prices if the raw material prices in the market shoots up.
Yeah.
So,
So copper is a non-entity for them. Aluminum foils, yes.
yes,
But
yeah,
aluminum foils, looking at the way and they have made inroads into their clients, right? When we talk about pharma majors and all, almost most of the pharma majors are their clients. And it's a packaging thing and flexo printing thing, right? When I look
yeah.
from a pharma major OEM perspective, that is not going to be a big cost for them. So that cost is easily passed on to the client, which is reflecting in the numbers. If we look from FY21 to 25,
Okay,
the
so
growth has
margins are
always
pretty
year
much
on year
stable.
has been like 40% or above. Margins are also improved. So that means they have a way of
Cost plus
like passing on
model.
the cost. Yes,
Okay, got it. Yeah. Thanks, Amar. Yeah.
sure. Is.
Okay, so let's move to Sunil. Thanks, Amar and Rishi, for the discussion.
Yeah. Hi, Puneet. Am I audible?
Yes.
Oh, I'll share my screen.
Yeah, go ahead. It's visible.
Yeah. So, yeah. Hi. Good morning, everyone. So this is Sunil, and I professionally am into software industry, and finance wise, like I've been investing in like from 4 to 5 years. So not a big expert like others, but thanks for the opportunity to Puneet to learn. And so today I'll be presenting about this company called Kopran Limited. Personally, currently I don't hold the stock, but I think it is a turnaround bet. And I'll explain why I think it is a turnaround bet. And so I'm not a pharma expert, so you can guys chip in wherever necessary. And so basically, Kopran Limited, it's a pharmaceutical company which manufactures and sells medicines within India and export also. And so it is currently a small micro cap company with the market cap of just 758 crores. And so it's a very old company, like 60 plus years old company. It's part of this group called Parijat. And Parijat has like group has other companies also. Like apart from Kopran Limited, there is they have another company called Kopran Laboratories. So laboratories mainly they focus on diagnostics, like diagnostic segment. So basically, all these pathology laboratories and hospitals they provide uh, uh, diagnostic equipments and consumables. And so they have other company called Oricon Enterprises, that is also a listed company, but that is not in pharma. It is actually into some marine logistics and packaging segment. So, coming to Kopran Limited, so this is an integrated pharmaceutical company manufacturing both finished dosage forms and APIs, active pharmaceutical ingredients, and intermediaries. And so they have three manufacturing plants. So one is two are in Maharashtra and one is in Gujarat. So these two are old plants. They have been running from multiple decades now. And this the one in Gujarat is the new plant. Um, that is being commissioned only a few quarters back. And I think they have started commercial production last quarter itself. And so the API is manufactured in basically MIDC Maharashtra, and it is actually under the name of Kopran Research Laboratories, which is a wholly owned subsidiary of Kopran Limited. And the formulations facilities at Khopoli and Maharashtra. And this Panoli is the new API facility that they have come up in Gujarat. And so capacity utilization wise, so the API facility at MIDC Mahad is 100% utilization, and formulation facility is at 60% utilization. And the new API facility, so it is actually under trial and validation phase. Commercial production to start in Q1 FY26. And the current plan is to reach up to 40% utilization in FY26 and 80% by 27. So the management is actually very experienced management. Again, they have been they are called Sumani. Their surname is Sumani, and they have been in this business for like at least 30-40 years now. And so the company exports to like around 50 plus countries, both in the regulated and unregulated markets. And both APIs and formulations are exported. So the API business, the development, manufacturing, and sale of diverse APIs and advanced intermediaries. And so they are one of the leaders of this product called atenolol. So this basically is a medicine for the API for high blood pressure medicines. And so one of the major players in this sterile carbapenems. So sterile carbapenems are basically the injectable antibiotics. So it looks like there are not many players in India for this, and so these are one of the major players in this segment. And and these are the different different compounds they have that they manufacture, and the different segments they're into. Most of the segments, like antihypertensive, neuromodulator, neurological, uh, s- uh, anti-diabetic, cardiology. So if you go into their website, I think it has got a very comprehensive list of all the medicines that they make, and it looks like the experience actually really stands out in this the product list. So they have around 26 products commercialized, and the facility at this is in Maharashtra. And this product atenolol has a market size of around $12 billion worldwide. And so they have a huge opportunity. Being a major player in this, leader in this product, I think they have a huge opportunity to capitalize that. And key players in the manufacturing of the sterile carbapenems. This actually is the worldwide market size is around 4 billion, and they're every year they're commercializing new products, which actually is there in their website. The new products they're commercializing, and in the formulation business. Again, the development and manufacturing of oral solid dosages and dry powder formulations for both penicillin and non-penicillin based drugs, catering to 100%. So formulations is 100% export market for them. So they don't sell it in India. Um, and again, similar to APIs, every year they're adding new products into their portfolio. And so these are all the different segments and major segments they're operating in. Um, so coming to the accreditations, so they have approvals in different. So they have approvals continents and different countries. So these are all the different countries that have approvals for formulations, and these are all the for their factories. They have all these accreditations from US FDA, EU approval is there, GMP approval is there. So they have basically all the deep understanding of developing products and formulations for different markets, meeting their standards both for regulated and unregulated markets. So this is the bifurcation of their export and domestic sales. So for the APIs, its majority is domestic, and around 45% is in export sales. And so this is the revenue for the latest quarter that they have for each domestic and export sales. And for the formulations, is as I said, is 100% export market. And so these are all the different countries they have established themselves, and they have their products running in all these countries. So USA is not still there. Like I think they have started to enter into the US FDA market. Yes, so they already have the approval, regulatory approval US FDA, and so I think this last year or this year they have started to enter into the US market. I think it will take some more time before they establish in the US market. So the financials wise, financials has not been great. This font is very small, so I just open it in the screener here. So the financials has not been very great till now. Like basically, if you see, they have taken around 7 years to actually just double the revenue from 2018 to now. But the growth has been steady, and they're looking for sustained growth. And there are reasons for why the growth has been very slow, and so one of them is basically the pricing pressure from Chinese competitors, and affected the revenue growth in the API segment. So basically, their volumes have been increasing, but it is not reflecting in their revenue, because because of the competition. So they don't have that enough pricing power because of this competition. And despite facing challenges, company has grown significantly in terms of volume, but revenue growth in rupees has been constrained by price declines. So for FY25, company had in their con calls had a guidance of 100 crores EBITDA, but they could only make 73 crores again due to API price pressures. So now the reason why it could be a turnaround bet uh, is these are the new developments and triggers that is happening in the company, and according to their con call transcripts. And so first development is on the CMO and CDMO vertical. So they are basically to mitigate this Chinese competition. Company is aggressively entering into contract manufacturing and contract development and manufacturing, and looking for in both in for mainly into formulations for now, and maybe I think in the future they are looking for in the API segment as well. So engaged in various CMO projects. Like currently, they have around totally 26 projects in pipeline. I think 15 is already in commercialized and stage, and 11 is still in the pipeline. And more projects is being planned, and so they have already started supply for UK and the Canada clients. Um, Yeah. So and then so basically the idea is the CMO and CDMO will replace the other business like the API business, and I think their planning is to the aim is to get to 60% of the total business with CMO and CDMO. So this would actually they have this actually allows them to get away from that competition, because CMO, and I think based on it works on contract, and so the prices are fixed for each contract, and they will their revenues will, I think, be more stable, and it will give way for more growth in the future. So and also the margins wise. So like currently their current margin, overall margin is around 11 to 12% EBITDA margins, and I think with the addition of CMO and CDMO, I think the plan is they could actually reach to 17 to 18% margins. So they have revenue guidance of around 1,200 crores in the next 3 years. So like currently they're running at 630 crores, run rate actually. Latest step, FY25 is 630 crores, and I think in the next 3 years, looks a bit aggressive compared to considering the previous year's growth. But looking at the changes they're doing into their product structure and manufacturing structure, it is company which we to keep in watch. And so margins to improve from 11 to 12% to 70 to 18% due to change in products and economics of scale. So I think if both the sales and the margin starts to show some improvement, I think it could be a good turnaround story. So, and another big trigger for I think this company would be their merger of Kopran Laboratories into Kopran Limited. So this Kopran Laboratories, as I said, is actually into the diagnostic segment, and they diagnostics. They provide consumables and equipments, and they take projects. They apply for projects to completely automate the equipments, and so there are different the operation theaters and those kind of things. And so there's a huge opportunity for them here. Like Kopran Laboratories again is a very old company, like that is also like 30 years old company, but they were actually restricted to very regions in India, So this totally is into Indian. They totally deal in India. There's no export here. So they were only dealing in certain regions, and the last few years they have been expanding to different regions of the country. So that's where which actually shows in their revenues also. So the merger approval happened in March 2025, and so but it is still waiting for other regulatory approvals to complete the merger. And so it is focused on Indian diagnostic segment. And so Indian diagnostic industry is currently a $14 billion industry, and growing at 14% CAGR. So that's a huge market size that they can address. They can address and make inroads into a lot of uh, big market size. And a proposed share exchange ratio. So this is the ratio, like 100 fully paid up equity shares of Kopran Limited for 45 fully paid up equity shares of Kopran Laboratories. So I don't have the final equity capital after the merger, but I think currently Kopran Laboratories is around valued at around 256 crores. And so I think I'm not aware of the number of shares which is present in the Kopran Laboratories. So this Kopran Laboratory, they don't actually manufacture any equipments. They're only marketing these equipments. And so basically they different MNC brands, they actually procure uh, different equipments, and they deploy it in all these laboratories, pathology laboratories, institutions, hospitals. And that is their plan. But consumable, but they have the recurring income is mainly into consumables. So basically wherever they install equipments, they have a contract to supply consumables there every year. So, according to the management, the merger will be EPS accretive, and so increase the EPS. And so they have a relationship with like around 200 clients, like all the major laboratories in hospitals, and they're all their clients. And and they're expanding into new territories aggressively. So like some of the main names are Thyrocare, Dr. Path Labs, all those are their clients. So they have multiple business segments. One is the diagnostics division, and so in this diagnostics division, they actually have this consumables. They're called reagents for clinical chemistry. So that actually constitutes 75 to 80% of their business. So this is a recurring business where, after installing the equipments, they keep on. They contract for they have a contract for multiple years with that institution, and they could actually keep making that recurring income every year. And and they're entering into other businesses also, like urine analysis and immunology. So I'm not very much aware of all these things, but I think it can be seen in their website here. Yeah, so this is they have all the information here about the diagnostics division, the infrastructure division, and house project division. So, and all their client list here. So the remaining 20-25% is basically this hospital infrastructure and projects division. So there it is basically sale of equipment, and so they apply for government tenders and automation projects in tier 2 and tier 3 cities. So the business model is basically, as I said, deploying diagnostic machines at client's place. The machines are owned by the company, and on a contractual basis, they deploy and against a commitment to buy a certain amount of consumables every year. And company has around 120 machines currently deployed all over India, and plans to add around 25 machines every year. So there is some capex that will be incurred every year for that. But I think they their capex is not a problem for them. I think because they have enough reserves in their company, and so they have enough cash in the company, and I think all will be covered through internal accruals. Uh, and they have their established their own cold chain facilities for storing these reagents and distribution. So all over India, and they have competition from these companies called Abbott, Siemens, and Roche. But I think the advantage over them is that Kopran deals with multiple international brands, and uh, so that is the edge over the competition. So sales, sales has been very good, aggressive last 3 years. As I said, it's a very old company, but the company has started to make some aggressive inroads into different territories. And so the 3 years back, the top line was only 35 crores, and so which has increased to 3 times in the last 3 years to 103 crores. So latest revenue is around 103 crores. So, and their EBITDA margin was also good. Unlike the formulations and the API business, here the EBITDA margin is around 20 to 30%. And considering the huge addressable market size, I think if the management works efficiently, and there could be a huge opportunity here. So coming to the technicals, so it's in actually a downward trend now. Like the stock has made multiple tops here at around 350 range, and currently it's in a downtrend. But exactly it is at the long-term trend line support levels now. So the price has multiple paths now. Like either it can bounce back from here, or actually if it breaks this line, I think the next support levels is around 136, and after that 93. So I think considering the latest developments, I think the downside is limited. And I personally feel like adding at around the next support levels around 136, and closely monitor the developments. So this is the strategy would is like strategy for me is basically waiting for reversal or buy in SIP mode at next support levels. So considering basically my bet is on the management experience and the capability of the company, and the huge experience the company has for the multiple decade of experience, and also the new transitions they are making in their business, be it the merger or and also the sales guidance also is quite good. Uh, so the currently at this current price, it's around 1.2x the sales, and the currently the market is not in favor. So I think if we might get it at the 1x sales in the near future. But considering that the management will walk the talk and meet their guidance values. And I'm waiting either for showing some signs of sales growth or margin improvement and merger approval. And I think these are the triggers I think I'll be waiting for and to add. And also technically looking at support levels to add next support levels. So I think this is the end of my presentation. And so any questions, I'm free to ask. And I think if I can't answer anything, I'll try to get back in the team, in the WhatsApp group. Thank you.
Great, Sunil. Yeah, good presentation. So one question from my side, and then we can go to maybe check the chat. So when the management has not even reached the previous projections, what makes us think that they might hit this time?
Yeah, previously it was only mainly because of the Chinese competition. Like, they don't have any pricing power. But they're currently transitioning to the business. They're transitioning the business from just the API and formulation business to CMO and CDMO. Okay, and they already have this 26 projects in 15 is already on the. It's already in place. Like Q1, they have started actually 15 dosage forms, and 11 is in the pipeline. Okay, so with the CMO and CDMO, they will not have the same pricing pressure, because here it's on the contract basis, and it's agreed upon pricing with the clients to manufacture and develop drugs.
So
So yeah, so
I
I
get
think
it.
yeah.
Get your point. So one more question from the chat is, how much sales is from Kopran Lab? Do you have that answer in this?
Yeah, so Kopran Lab is it's like around see latest year they made 103 crores
Okay.
yearly sales. So they have moved from they have tripled their revenue from 3 years, last 3 years.
Okay. And Madhusudan Kela has increased investment in Kopran, is one of the participants has added. So that's a
Yeah,
good sign, possibly. Yeah.
correct. Yeah. So Madhusudan Kela is also. I think since the company's market cap is below 1,000 crores, I think a lot of people, institutions will be waiting because they won't invest below 1,000 crores. I think. So I think once it moves beyond 1,000 crores, maybe there will be more interest from other people.
Yeah. Okay. Any other questions from participants? Okay. If no, or if anything else come up, you please put in the chat, Zoom chat, and I think Sunil will be able to answer from the chat itself. Thank you, Sunil, once again for putting your hands up and presenting it. Thanks a lot.
Yeah. Thank you.
Okay. We'll move to the next presenter, Jagan. You are there in the call, right?
Yeah, Puneet, I'm there.
Yep. So I made you the co-host.
Is my screen
Yes.
visible?
Yes, we are able to see your screen. You can go ahead.
Yeah. Am I audible clear?
Yes, you are.
Yeah. Yeah. So the company that I'm going to present today is Knowledge Marine and Engineering Works Limited. Just a minute. Yeah. So basically, this company is into dredging and operating ships, vessels, boats, etc. They're into the main business of dredging, which is, so basically the dredging would mean that over the period in seaports and riverbeds, etc., uh, the sand get accumulated, so which reduces the ability of ship navigation. In order to improvise the depth of the sea beds and seaports, there is a process called dredging. So in case of dredging, basically the accumulated sands are being taken over from the seabed and seaports, which is so then disposed of in a separate area, so that it improvises the overall depth of the seashore and the seaports and also the river ports. So the company's main business is this. So the way they operate is they build their own ships. Either they import and assemble the ships, or they charter the ships from other shipping companies. They deploy these ships in the port area, and they do the dredging in the ports. There are broadly two kinds of dredging. One is the capital dredging, which is in a port. If dredging was never done, if it is done for the first time, that's a longish kind of process wherein they would sort of doing it for the first time and take the sediments from the seaport. The other one is a maintenance dredging. Once a capital dredging is done, year-on-year dredging is done in order to maintain the depth of the water level in the ports. In terms of their capabilities across projects, so they have so the regular dredger, which is so used in the shallow water, like the one we see in, for example, the if you see so the Mumbai ports, etc. So wherein so it's a shallow water. So you take the sediments from the seashore. Whereas there is something called trailing suction hopper dredger, which is more into a deep water sedation removing process, wherein they will have to dredge from the sea, from the deep water. And apart from that, there are cutter section dredger and many other kinds. So cutter section dredger would mean that they would sort of deploy the sediments, so which are hard. So first they'll have to cut those the sediments and then pull that out. So they'll be using suction pipes, etc., in order to pull it out from the seabed. Apart from that, the other pilot boats, etc., that they deploy are so pilot boat, patrol boats, which are typically required in the
Yes. It's
which
raining,
are
Nani.
typically required in the seaports, etc. There is another addition is the tugboat. So tugboats are typically used in to navigate the large vessels and ships. I'll show you one picture. Yeah, so the small boat, if you see, this is called the tugboat, and we'll see there is an opportunity over there for the company, which we'll see in detail. So this tugboat basically navigates the larger ships to the port, because the larger ships, once they are near to the shore, they'll not be able to navigate on their own. So it had to be navigated through another smaller vessels, smaller boats. That is the objective of tugboat. This is an interesting slide. So this gives a overall journey of this company over the last decade. So this also provides a insight into the how the management thinks about their business and how they have over the period expanded their business from a smaller aspect to a larger aspect. Like, so they initially started in 15-16 with ship repair and refit, etc. And then they moved on to the dredging business, which is, so taking the sediments from the seashore, etc. And then if you see over the period, uh, so think about, so if I'm a businessman, if I think about this, so I'm taking away the from the dredging process, I'm taking away sand. What I do with that? So they came up with the wealth waste to wealth playbook, wherein so they are saying they also will take the sand and sell it to the customer whosoever wants it. So in that manner, they in 23-24 they have sort of so went on to Bahrain. So Bahrain is reclaiming their lot of land, sea area, in order to build so larger cities, etc. So there they have won about 450 500 cr worth of contract, wherein they will be taking away the sand from the seashore, and then they'll be selling that sand to the Bahrain government itself. So the thought process of the management is quite radical, in the sense that so they are able to find newer opportunities across their segment, and as such, so they are not diversifying into a different segment altogether. In the same business, in the marine related activities, they are able to find out newer opportunities, thereby expanding their TAM over the period. Now, what are the growth triggers? So far we have understood that, so they are mainly into the dredging business and operating smaller ships, etc., boats, etc., which are used for tugging, patrolling, etc. Now, after the first decade, now they have identified few more newer opportunities. So one interesting thing that management talks about in their calls is their ability to contain the overall cost, the capex itself. So typically, the other uh, dredging companies in India, they import the boats or dredger itself from outside India, mainly from China, and then they will deploy it. But they have a different approach here. They basically import the equipments from China. They assemble it over here. So over the last 10 years, they have got the know-how to build the ships also for their own consumption. So which is, so they will import the dredger equipments, they will assemble it over here, and then they will deploy it in their project. Some of their notable projects which they have done is, so the Myanmar project, the Kolkata port project, etc. And execution wise, they have claimed that they have a very good track record of executing larger contracts. Now coming back to the shipbuilding aspect, in terms of shipbuilding, as I said, over the period they have got the know-how to build their own ships for the deployment. So from there onwards, now they are extending their business, wherein they would like to do the shipbuilding for other requirement from the government or private players. That's a new opportunity that they have found. Second thing is the green tugboats. So there is a new initiative from the government to for these tugboats which we just discussed. So these tugboats are typically diesel operated. Now the government would like to get to environment friendly, either a electric operated or a hydrogen operated tugboats. So that has opened a huge opportunity which they will get into. The other thing is the inland waterways. So there is a huge government push for the inland waterways, wherein the cargoes, passengers are being moved through the inland waterways. There are about three main inland waterways in India operating in the Ganga, Brahmaputra, etc. And the government has planned to expand those networks over the next decade or so. So they have similar. So one is the dredging that they will do. The other thing that they are going to do is to maintain this entire inland waterways, which will be an annualized contract that the government can give. So let's go a little deeper into some of these new opportunities. So one is the shipbuilding, which I said. So basically here, as I said, they have existing capabilities to build these ships on their own. So thereby, they're able to build the ships at a much lower cost than the competition. And here, when we say shipbuilding, it is not, they are not into the building of large ships. These are smaller craft, smaller ships, boats, etc., which will be used in the ports or in the inland waterways. For example, recently in early August itself, they have got an order from the Inland Waterways Authority of India, wherein they have got an order for about 12 number of boats and accumulating into 80 CR of order size. And this will be executed over next 20 months. So in terms of execution, if you see, these are not like 3-4 years execution time. This is quite about 20 months itself for building 12 number of boats. And so the management says that for building their dredgers, etc., they are able to do it within a span of 60 to 90 days, which is quite remarkable from a shipbuilding perspective, especially the smaller craft, since the overall timeline to build it is quite narrow as compared to their competition. That's the management's claim, but so the competitors may take 9 to 12 months, which they are able to do it in a 3 months time. Green tug opportunity, as I said, so this smaller ship, which smaller boat, which will sort of help navigating the larger ships in the ports, are the tugs. So currently there are about 400 tugs that are operational across Indian ports, and the government has planned to make greener tugs over next 5 years. By 2030, they would like to convert 50% of them into greener tugs. So we are talking about a huge opportunity here for the company. So this is Green Tug Transition Program, which is a new initiative from the government, which aims to convert this entire 400 tugs that are operational in India by 2047 into greener tugs. In terms of opportunity size, so currently the company has said in their investor meet that they have bid for about 2,400 crore worth of contract. Now these contracts, I think so these are a larger, longer period contract, like about 15 years contract. So which means that so every year it might give them about 150 crore of revenue if they win all of them. In terms of opportunity size, recently another competitor for the Kandla port, there is a green tug bidding was done, and another competitor has won that. I think Ripley Group from Kolkata, who have won this bid for about 6,30,000 per day. So basically they deploy the tugs and they will get about 6 lakhs per day. So which accumulates into a 20 CR worth of contract in a year, and over the 15 years. So these are sticky contracts which will come for about 15 years. So if we convert this 20 CR per tug into overall market size of 400 contracts, 400 tugs, so we are talking about a market size of 8,000 CR. Inland waterways is another opportunity. So wherein so currently there is this Jal Marg Vikas project which is going on. So wherein the Ganga Bhagirathi Hooghly river system that is being developed, and then so they are going to expand this into inland waterways wherein they can transport cargo and passengers. Currently, out of the Jal Marg Vikas project, they've got about 26% market share. So about the total 1,390 kilometers of order, they have won about 365. And in terms of order size, this is about 270 CR. These are not annualized contracts. This will be executed over a period of time. So with all these opportunities, the addressable market size, as I said, so they started from a mere repair to boats, etc. Then they moved on to dredger, and then selling sand, and then from there now they are moving on to green tug, shipbuilding, etc. If you see slowly they have expanded their addressable market size from, say, for the dredging, seawater and river water, etc. That's about 12,000 CR of potential market size, and so in terms of their sales, they are only 200 CR currently. So with that, so being such a small player, from there, they have huge runway in terms of capturing this market, and so huge opportunity over there. So green tug, as I said, it's about 8,000 CR annualized basis, and for shipbuilding it is around 8,500 CR. Now this 8,500 CR, about $1 billion, that is including all the large ships, etc. So even if we consider for the smaller ships about 1,000 CR, the numbers are not available as such. So I'm just putting an estimate. Then also they have a huge opportunity over there. In terms of their capex plan, If you see in March 2023, they had about 50 CR of 50-60 CR of capex, I mean fixed asset, and they have an asset turn of about 3x to 4x. So in end of March 23, they have made a turnover of 200 CR. Of course, so their turnover had been kind of flattish over the last 3 years. There are reasons in terms of project execution, etc. But the point is, with the increased capex, which has now moved up to 160 CR, now they have the ability to take a sale of about 600 to 800 CR. So that's the capacity that they have, and they have a capex plan of about 500 CR over next 3 years additionally. Another industry development that has happened, which for which so they have been a key beneficiary, is on the tonnage tax. So what used to happen is this tonnage tax is a system. So typically for corporate tax, tax is applicable on the net income, that is revenue minus expenses. On the net profit, the company will have to pay taxes. Whereas tonnage tax is a system wherein, especially for the shipping operating companies, wherein they get to pay basis the tonnage capacity that they have. So if they have a total tonnage capacity of say 1,000 metric ton, then so on that there is a formula basis which they can pay the taxes. Now this is a significantly reduced tax number as compared to the typical 25% tax on corporates. The company claims that it will be about 2% on the net income. So which means that 90% of the overall tax cost will come down, which means the back of the envelope calculation comes to around an increase in net profit margin by about 5% for that. In terms of their order book, currently they have about 900 CR of order book, and they have bids in pipeline, which is so for dredging, shipbuilding, green tech, small crafts, etc., about 3,600. So out of this, in fact, this was an investor meet sometime in July, and then in August itself, they've already got one order for the shipbuilding of 80 CR. In terms of financial performance for last few years, and then so the expectation, if you see, they have been like growing their sales from 60 CR to 200 CR in a period of 3 years, and then in terms of margin, they have a very robust margin, about anywhere from 30 to 40%. The reason is that in their all their con calls, the company says that they are pretty selective about their projects. Before bidding for the project, they do soil testing and other surveying, etc. And basis which they get to know what would be their overall cost, and accordingly they make a bid. So unless they have a margin about north of 30%, they will not make the bidding itself. So they have a very good thought process in terms of what kind of projects they want to take, and beforehand they would know what kind of margin. So unless they hit that margin criteria, they won't bid for it. So that explains why they have a consistently higher margin in their business. And even the green tug projects which they are saying, so there also they are claiming that the margin is about 60%. So that way, overall, we can assume they should be maintaining this margin of about 39-40% over the next 3-4 years as well. So currently, the company is valued around with a PE of 34, and so if we assume a exit PE of 30, and if the company is going to grow at a say 25% CAGR over the next 3 years, then we are talking about a sales of 395 CR and with a net profit of about 100 CR. This is again a conservative approach. I have conservatively assumed the sales revenue that are going to flow from the newer growth triggers that they have. namely the green tugs, shipbuilding, and inland waterways, etc. And again, in terms of NPM margin, as I said, because of the tonnage tax, they might see an uptick in their NPM margin from the current 24-25%. It can go up to 30%. And then, so I have reduced it to 27%, given the fact that they'll have a mix of the other activities also, like shipbuilding, etc., in which case the normal corporate tax will fall. In terms of risk factors, the order book, so they have a heavy reliance on winning large government and port contracts. This industry itself is a policy-driven industry. So currently there is a huge push from the government on various business segments, be it on bridging, shipbuilding, port development, etc., and even the inland waters. So there is a huge push from the government, which makes which makes the industry in a tailwind kind of situation. If there is a policy change, it could impact their overall business. Execution and project risk. This is one of the biggest risks for them. So, for example, in FY24, yeah. So FY24, they saw a reduction in their sales. And in the con call, they mentioned that the main reason is that in terms of the environmental and external factors, because if the ports have any kind of inability for them to execute the project because of the weather condition or other external factors, then they might see a reduction in terms of their execution capabilities, and which in turn will reflect on their revenue as well. Capital allocation is another bigger thing. So some of these projects, like the shipbuilding or the green tugs, and also these are heavy capex business as well, because if they have to get into the business, they'll have to deploy those boats, etc., which they'll have to procure or build on their own, which will be a capex. Technology and asset obsolescence is another risk factor, and client concentration risk. Most of their clients, as we discussed, are governments or ports. So they have very limited number of clients in terms of overall their portfolio. So that poses a risk for them. Competitive pricing and pressure, yeah. So that's another thing. Likewise, so the latest bidding which they've done, so wherein the other company has won for the green tug, they have quoted about 6,30,000 a day, whereas Knowledge Marine had quoted about 6,57,000. So the pricing difference was about only a couple of percentage, but because of that smaller gap, also they couldn't win that project. So that poses a risk for them. Geopolitical and international risk is another thing, which is anyways applicable to most of the business. In terms of their leadership, so most of the chief persons, like be the chief executive officer, managing director, all of them have a greater number of years of experience in this domain. So in fact, Sujay, who is the main person, so he had been an industry veteran in LNT shipbuilding, etc. And from there, they have sort of started this company. In fact, in one of the call, he said the name Knowledge Marine is because so when they started, they only had knowledge about the entire marine industry, and hence they have given the name of Knowledge Marine. So with that, whatever the expertise that they have built onto it, and then they have sort of grown the company from a smaller company to a larger company, and now they are looking at even going into a bigger projects now onwards. These are some of the projects you can see. This will be anyway shared with you. I think that's it from my side. I think finished it quite early.
That's okay, I think. You gave a good insight into Knowledge Marine businesses. One question I have personally is, this tonnage tax is already applied, or it will be starting from certain time period?
I think this applicable from the current year. So
26,
this tonnage
financial
tax,
26.
sorry. Sorry, Puneet.
Financial year 26, you mean?
Yes, that's right.
Okay.
So in fact,
another-
so the tonnage tax had been there for quite some time, but it was not applicable to this dredging business and other port activities. Now the finance bill has sort of so made an amendment to include these players also.
Okay. One question from the chat is, a promoter is selling the shares from last 3 years. And on the other hand, we are seeing that industry is growing. So any specific promoter which is selling or some insight into that would be helpful.
I think the reduction is on account of so the new capital that they have brought in March, I think 23-24 FY 23-24, they had a preferential issue to non-promoters, which has sort of reduced their stake. And in terms of before that, there was a so stake sale of about 5%, which they clarified in one of the call that that was because so they have worked so many years, about 10 years in the company, and they wanted to cash out something which they've done. Otherwise, there is no specific reason for them to sort of sell.
Yeah. From the audience, any questions to Jagan? And I think recently there are two notifications, right? Government is increasing the maritime fund to 70,000 crore. And one more is on the Maharashtra shipyard, increase in the clusters of the shipyards in Maharashtra. So I think the industry is having a tailwind. How this
Definitely.
company will be able to utilize it is we have to see.
That's right. That's right. In fact, some of their contracts are, which they, again, in one of the call, they said that think about like, so Dredging Corporation of India, which is an immediate competitor for them. They have a sales turnover of about 1,000 CR, vis-a-vis this company having 200 CR of revenue. So there is a big gap. But the way they are saying, Dredging Corporation operates in a larger shape. So
So
they
guys,
operate in the larger ships, whereas so they operate in smaller ships, etc. So from that perspective, they have a huge advantage, and the larger companies, like some of the foreign companies who are also there in dredging business, they don't uh, bid for smaller projects like below 100 CR and all. So that gives them a competitive advantage, and also they are able to maintain their margin.
yeah.
And yes, in terms of industry tailwind, of course, so given the push from the government to expand the port network in India, so as it expands, obviously you will need more and more dredging activities and other ancillary marine activities, which they will be placed to do it well.
Mhm. One more question is on the any technical analysis you have thought of in terms of price action chart basis.
No, Puneet, I'm a technical guy. I've not done that.
Okay. Okay, any other questions, audience? Okay, if no, then what we'll do is we'll break for 5-10 minutes and join back by 11:55 just to get somebody a break in between. Is that fine with all of you? 11:55 we should be back.
Yes, Sunny.
Yeah, and we'll start with Pankaj. I see Pankaj is here or not. Let me check.
And Puneet, thank you so much for this opportunity. Thank you all for patience listening. Thank you so much.
Definitely, it's our pleasure to listen to all of you. Actually, new perspectives, new stocks. Yeah. Okay. Yeah, we'll assemble in 10 minutes. Suraj, Pankaj is with you or are we separate?
No, Pankaj is at different location. I'm trying to call you now.
Okay.
I'm trying to call him. Yes.
Okay.
Yeah.
Sure. Okay, so we'll assemble at 11:55.
Hello, hi Puneet.
Yeah, hi Pankaj.
Yeah, can you able to hear me?
Yes, yes, I'm able to hear.
Sorry for last minute. Huh?
No, it's okay.
Last minute rush.
I've given you the permission to share. Just check it.
Yeah. Can you able to see the screen?
Not yet come up.
1 second.
Yes, we can see now.
Okay.
Request all others to go on mute. We keep on seeing interruptions a little bit more than the normal ALD sessions. So please be on mute. Yeah, Pankaj, you can go
Yes.
ahead.
Okay. So thank you so much for the opportunity. Can you able to hear me?
Yes, yes, we are able to hear you. Go ahead.
Okay. Okay. So the company which I'm going to present today is GP Eco Solution India Limited. This company is fully into the integrated clean energy solution provider. The current market cap of this company is around 680 crore Indian rupees. Yesterday's price was around 581, and we started buying this company when the market cap is around 310, 320. This company listed on the NSE platform by June 2025 with a gain of 400 plus percentage as a listing gain. So it's a standard disclaimer. Whatever I am sharing right now, it's only for the educational purpose, and it's with my limited understanding about this business. I may be wrong, but we need to deep dive into this subject one more time. Brief introduction about this company. Company is incorporated in 2010. This company is basically into the manufacturing and trading of solar panels, solar plants, and the associated electrical equipments and the solar equipments. Company is ISO 9001 and 2015 certified distributor of solar inverters and solar panels. So they have authorized distributor of SunGlow India Private Limited for solar inverters in North India, and authorized distributor of Satvik Green Energy and Longi Solar Tech for solar panels, mainly for North India. Additionally, they also serve as a EPC client, as a EPC service provider for commercial as well as residential customers. Company has their own brand called Invergi, which deals with the OEM manufacturing with the hybrids and LFP products, lithium ferrophosphate products. Under this brand, company sell the hybrid solar inverters and LPF batteries. The company, as I discussed, they started in 2009-10 as a LED manufacturing company. Then they ventured into the solar EPC and services in 2013. They crossed the milestone of executing the EPC job of the capacity 500 kW. Then appointed in North India as a distributor for SunGlow. Then they diversified their offering into the storage system and lithium-ion batteries in 2022. They supplied more than 583 megawatt of projects, and they also incorporated their own brand called Invigri. In 2020, they supplied 85 plus megawatt projects, honored with this Spotlight Award by SunGlow, which is the distributor of SunGlow as a brand. They supply in 2019. They supplied 70 plus megawatt. In 2023, they expanded and out of reach of North India to Pan India with their premium tires, one brands. In 2024, this company got listed in NSE, and they applied for the NSE listing and launched their IPO. They partner with Adani Solar, and they also incorporate their own subsidiary called GPES Green. In 2025, they acquired 51% stake of Fuelon and started their 1.2 gigawatt of solar manufacturing module factory. So these are the group companies in glance of GPS Solar, building the trust and partnership. It's a parent company of GP Eco Solution India Limited, mainly into the distributorship and comprehensive service provider, mainly for the integrated solar solutions. So as I discussed, Invigri is their own brand where they manufacture solar inverters, energy storage systems, catering to the residential, commercial, and industry and utility sectors. GPS Green is mainly into the offering the turnkey EPC solutions, project management consultancies, developer partnerships, provided. Sorry. So they are mainly into the turnkey EPC projects, project management consultancy, developer partnerships, energy as a services to meet the diverse energy needs and the requirement in the industry. Fuelan, they recently acquired 51% stake in this company called AN3 Techno Power Limited. It's mainly for the manufacturing of the BES, an emerging company into the lithium-based storage fuel technologies and specialize in the manufacturing of energy storage systems. We'll discuss more in detail one by one. So these are the comprehensive, the solution offering under one umbrella. As we discussed, the distribution of with the key partnership, Sunglow is one of them, Adani Solar, and Invigri as their own brand. Under manufacturing, there are two brands called Invigri, and another one is this Fuelon. EPC and PMC, they are doing this through company called GPS and Green. They take a turnkey projects and they deliver most of the project. So till date, most of the revenue the company is getting from this division called EPC plus PMC. And their upcoming plan is to have their 1.2 gigawatt solar module factory in Noida. These are the new product what they recently launched: LV series of hybrid inverters, off-grid inverters, HV series of hybrid inverters, some special type of batteries, all-in-one generators, battery banks, and BES. These are the latest product range of this is the latest product range of Invigri: hybrid inverters, off-grid inverters, BES, battery banks. Then this a lot of small component into it. As we discussed, they took this 51% stake in this company, AN3 Technologies, Techno Power Limited, mainly for the energy storage solutions. So they are the innovator for this type of solutions. The preliminary, these companies focus on the developing on the lithium batteries used for EV and EESS application. This is one of the largest emerging lithium battery manufacturer and solution provider for 2 and 3 wheelers EV mobilities, energy storage system for industries, commercials, residentials, and IoT. This basically the shaping the future of solar and energy storage with multi gigawatt vision which company has. These are the opportunity size mainly for GPS and Green. So these are the project listed that are upcoming projects from this region. These projects will support the India's ambition to cater the energy need requirement through this renewable energy missions and statewide electrification goal. Company did the recent con call. The summary of the con call I just wanted to present here. They are evolving their business model. As we see, 2010, they evolved themselves over the period of last 15 years. So now going forward, they have planned to evolve this business model altogether. So they are the fully integrated clean solution provider. The company is historically specialized as a distributor, but now they are aggressively expanding into the manufacturing of their own batteries, manufacturing of the inverters, including hybrids as well as off-grid energy storage system. BESS will be the game changer for this company going forward, as per the commentary which management has given. Company is doing the backward integration, so they acquired this company, enabling to start their battery and BESS manufacturing in Noida. Certainly, this will help for company to improve their margins and ensuring the proper supply chain control for the critical components which they are doing in-house. They are planning to do this EPC and PMC expansions, mainly through this subsidiary called GPS Green, which predominantly will focus more on PMCs and EPC execution stuff. So they recently hired a lot of experienced professionals from the same industries. Those who have a specialized experience on the execution of such a critical projects. In terms of brand positioning, as we discussed, they already launched their own brand. They are offering the advanced hybrid inverters and lithium-ion phosphate batteries. Marginal commentary, they mentioned that based on this in-house manufacturing, increase in the in-house manufacturing and scaling of their operation, certainly it will impact on the margin going forward. And management expect that this margin expansion as a key component are now being manufactured in-house for other group of company or their own group of companies. Power launches and the capacity expansions. They recently launched 2 new models for eco and premium categories for off-grid inverters. This is mainly to tap the large market share, large storage and the office system market. So the plan is to increase this capacity to 50,000 units per year, mainly focus on this, considering the focus on the PM's Surya Ghar Yojana implemented by the Indian government. They have planned to start their solar module line, setting up the 1.2 gigawatt module for manufacturing plant mainly in UP, and commissioning by the end of FY26. And certainly it will expand to 2.5 gigawatt in Madhya Pradesh, for which they already signed an MOU with the Madhya Pradesh government, and plan is to finish this by FY28. As I discussed, BESS facility, currently the existing capacity what they have is 500 MWH capacity in Noida. It will expand to 2.5 gigawatt automatic line by the end of FY26, and long-term vision is to take this to 5 gigawatt. Certainly, there will be a capex and funding guidance for initial 1.2 gigawatt solar module plants. Approximately 100 crore is required, for which they already acquired the land. And for next 2.5 gigawatt HBSS expansion, certainly they will be requiring 30-40 odd crore rupees, which they will do, and it will be in a phase manner. It will not be one go investment for the company. So this is as per their latest con call. Coming back to the fundamental of the company, it's relatively the small company. Market cap is around 680 crore. Currently, the P is around 66.7 as a P multiple. But if you see the future prospects and the commentary which they have given, if we calculate properly the forward P, it is available in the P of 4 to 8 P multiple. I'll explain more in detail on this. ROE and ROC of the company is relatively good, more than 25%. The promoter holding itself is around 62%, and the debt to equity ratio is 0.55. Considering the ongoing expansion required, this debt to equity ratio may go up as we move forward. See, important point to note in this company, you can see this. We have the financials from 2020 till date. So company has grown up from the top line from 18 to 46, 46 to 83, 101, and now we are talking about 240 crore by 2025. In the recent call, company has already told they already have the job in hand of around 500 crore rupees. So we'll not surprise that they may add 200 to 300 crore more by the end of FY26. So what we are talking about is roughly 700 to 800 crore of top line by the end of 2025. Right. So this is basically the top line, which is the sales number. If you see the profit growth here, the company was not generating any profit in 2020, which is zero. From zero, they were about to close this 10 crore for financial 2021. So we can consider looking at this number. It's a growing company. They have their own challenges, but certainly they will try to overcome that. And the OPM, whatever we see here, is a 4%, 6%, 9%. It will certainly improve once they start manufacturing by themselves, and they will shift themselves from this distributor model to their own manufacturing things. So these are the financial over last couple of years. So every year, the revenue is going up by 25%, 31%, 77%. Relatively, the PAT is growing above 35%, 88%, and 46%. So yes, we can see that this is a growing company. This is the current, if we compare this financial year 24 to 25, so these are the main highlights of the jump in their revenues, EBITDA, and the PAT margins. So revenue has grown up by 78% from 24 to 25. If that is grown from 240 to, let's say, 600 or 700, it will be a substantial jump, and the percentage will be much more higher than 78%. The EBITDA, you see 37%, it has gone up, and PAT has gone up by 42% from 2024 to 2025. These are the brief guidelines on the financials as per the recent earning call that they have. I think it's not an earning call, it's basically their latest EGM call what they have. Okay, it's a typo error from my side. So 70 to 90 crore of the revenue from BESS, which expected to receive, raised mainly from the solar EPC. So revenue guidance, what they are mentioned is around, like as we said, in 2025, they achieved 246. As per this guideline, they have given 3x of the guideline, which is around 750 crore top line for next year. And cumulative EBITDA is 5x of the 2025 EBITDA. In 2025, they have given the 6x as a revenue guideline, which is around 1,500 crore, and the EBITDA will be around 160 crore. Look like very optimist, like, too much guidance, too much aggressive guidance, but we'll see how they will do it. In terms of PAT conversion, these are the PAT conversions in 2024, 25, and 26. Let's say 26 is around 70% with the economies of scales, but we can use as a 65%. Once we see the PAT numbers, it's around estimated PAT is around 52. Then 2026, the PAT is around 104, and so on for next 2 years basis. This company is available in the multiple of, let's say, 4 times of the P. Now the things can change. The promoter thinks these are very conservative numbers, and all the things are available on the internet. You can go through this. So even they can achieve this 50% of whatever they mention here. We are talking about 8 times multiple for the P. One thing I just wanted to tell you, like BSS will be the game changer for this company as we discussed, and the solar EPCs there. The real P multiple will come from the BSS, which has even bigger CAGR. So the reference of which I have given, like YouTube video and their latest EGM which they posted on the NSE website. So these are the the brief highlight of their vision for 2030. In terms of solar EPC, they want to go to 1 gigawatt as a EPC project execution capability. In terms of BESS, they have planned to go to 5 gigawatt capacity. And as we move forward for financial year 2023, they want to increase this solar module facility up to 5 gigawatt from 1.2, which is planned right now. As per the commentary, and as we know, this the industry is growing itself with a CAGR of 200%. So rapid and exponential growth for the solar industry, basically in India, and a lot of policy is being made around that. Mr. Mark Pandey is basically the promoter and MD of the company, stated that the company is anticipated to have 3x revenue jump by FY26 compared to financial year 25. And by 25, the growth is projected to reach almost 6 to 7 times of 2025. It's again subject to the market condition and driven by various factors. Why they have given this guideline is they are thinking that BSS, solar EPCs, and module manufacturing will contribute substantial amount of top line growth. Mr. Pandey reaffirmed that the EBITDA is expected to grow by 5x and 10x by FY26 and 27. These are the financial projections as a growth estimate. These are just whatever commentary we have seen and what we discussed. We just try to project the numbers here for financial year 26 and 27 as expected number. So 700 as a top line for 26 and double of that in FY26. If we say there is, let's say they can able to make this 6% or 6.4% of the PAT margin, so the PAT will be roughly 45, which will be almost 4x jump from the existing PAT, and it will be 9x jump from FY25. So the current market cap, even today, the PE of this company is around 67. If we get, let's say, conservatively, the PE of 35 and 30 multiple, so it could be potentially double a market cap. Like it could be a double from here in next 1 year of time, and it could be 3 to 4 times or even 5 times than the today's market cap, which is 687, and the projected market cap is roughly 3,150 crore. These are just the estimated sales and PAT plotted based on the guideline management has given. Okay, in terms of credentials, the company till date has delivered, as we discussed, more than 15 years of the experience in the same domain. They already supplied to more than 2 gigawatt projects within India. They have consulted more than 65 plus megawatt projects till date, and they have more than 4,000 plus happy customers. These are the list of the clientele with whom we can see the major renowned players are here. Like Sunshur is there, Jindal is there, Wari is there, Adani is there, Reliance is there, Adler is there. So yes, they have good experience, and most of the people which they are onboarding, they are bringing from that expertise. Oriana Power is there. So these are basically the presence across the India, and certainly plan is to expand this further within India. Company don't have immediate plan to go outside of India, because what they say that they are in the one of the sweetest market available in whole world, which is in India. So they want to more concentrate on India itself. Okay, coming back to the potential risk and the challenges. Certainly the execution risk will be there. We see very flashy numbers in the earlier slides, but the challenge is that how they will execute this going forward. So scale up ambitions are high relative to their current balance sheets. There will be a challenge of execution, and funding disciplines will be a critical going forward. Always there will be a risk of supply chain, because the sales, whatever sales is required, they are mostly coming from outside of India, so they are importing. So it's a import dependent. So structural risk is there. Funding need, again, the largest capex plan against the current balance sheet, it could be a challenge. Management acknowledge that the current balance sheet is not supporting to their plan. That debt is the only way to go forward, and they may go with the big amount of equity dilutions in coming few years. The management tone is highly optimistic and confident about their numbers. They are mainly emphasizing on the rapid scaling and strong order books and marginal expansion through the various integration, as we discussed. But these are the potential risks what we can see. When we say management tone, we don't need the management who are giving too much high level of guidelines. But again, they said these are very optimistic number and the conservative number. But we'll see in next 1 year of time how they perform. So this is a conclusion on the right to win side. Aggressive expansion, as we discussed, they are doing the backward integrations, capacity scale up across the solar modules, inverter and BSS. They are also expanding the channel partners within India. Currently, they have around 50 plus channel partners. So they have planned to expand this. Upcoming BSS factory, which is 2.5 gigawatt in Noida. What they are talking about, like this BSS itself has a 2,000 plus crore revenue potential. Upcoming module factory, as we discussed, it will be ready by financial year 26. Urgent, the marginal will get improved, in-house manufacturing, economies of the scales, and better procurement leverage. Strong order book, as we discussed, they already have this 500 plus crore order book in hand, and there is a large number of EPC orders and significant pipelines are there, mainly from the BESS and the solar EPCs. So 500 crores plus, let's say 300 or let's say 200 crore. So we are almost there, 700 to 800 crore for this FY26. A lot of things are under development, mainly for the digital plus IoT enable smart meter stack under the development. They are also planning to develop their own software, which Indian government has said that it should be an in-house made in India software. So they are working on that. They already onboarding a lot of talented people from the same industry. As we discussed, they are sitting in the most potential market, which is India. They don't have any plan to go into the export market, mainly focus on the residential and BSS segments as a key driver going forward. Again, the potential of top line around 700 crore with a PAT guidelines of 7 to 8%. Certainly, this 7 to 8% will increase to 9 to 10 for 2025 with a top line of 1,200 to 1,400. So that's all. If you have any questions, please ask.
Yeah, great. Great, Pankaj. So, one question is, it's mainly on the solar part only, right? In the renewable space, nothing else.
Nothing else, yeah.
Okay, okay. And when we are talking about BESS, BESS, do you think the margins will become very, very rare? Basically, it will not be high margin business because a lot of companies are jumping into BESS and it may become a commodity.
Yeah.
Do you think that will make a significant progress for the company's bottom line from BESS?
Bottom line will be a challenge, to be very honest. Top line, I think they can achieve. But considering, the cumulative effect of in-house manufacturing, scaling up their operation, increasing the top line, reducing their overhead, that divide that overheads into the various product line and the numbers, seems 7 to 8% could be possible to achieve. Yes,
Okay.
it will become a commodity, as you rightly said. But next, we need to visit this every quarter, like what's going on and how they are performing.
Yeah. Another question from the chat is, how biggest is the competition for this company?
There will be a challenges and there will be there will be certainly a competitors. It's not like a single source, but I have not studied that part well, so I could not able to answer that right now.
Okay. Another question is, borrowing is increasing and trade payable is increasing. So even before Pankaj jumps in and say, I think for the smaller companies, even the ones presented today morning also, a lot of this would be applicable because smaller companies, when they are into the capex cycle, borrowing would be increasing. And trade payables, yes, possibly it depends upon the cycle, seasonality as well. Okay. Yeah,
And
I
you can
think.
see a lot of buyings are happening from last couple of months, so this interesting company to watch out for.
Yeah, participants can unmute themselves and ask.
So, hi Pankaj, Rajesh Agrawal here. Thank you for a great presentation. And I think I've been invested in the GP Eco, so I have been trying to find out more information. But the way which you have pointed out, it's amazing presentation. Thank you for that. And one or two questions actually, because there are a couple of fund houses which they have been buying aggressively. Any seller they are buying. So, and even I'm trying to buy at the lower level, but not at this moment. So, like 580 is the range where things are moving up for last couple of weeks. So do you think that by looking at the business and all, I believe that price is not going to be go down until something serious happens. So can we still enter into this level?
I think, to be very honest, if we understand the business and if we are confident on these, whatever they are presenting, I think there is no harm to take some position in this. A lot
Right.
of smart people are buying in this script. They might have seen a lot of value. Look like it's an aggressive company, and the way they have done from last 4 5 years of time, certainly they will do well. It's a basic assumption which we have sitting in the home, right? But the people actually who are going on the ground, see the things are happening, meeting the management, seeing the factories. So I think they have more access than us.
Okay. No, thank you. Actually, they have recently hired the, I think, management CEO, a very experienced person. So they have tried to get the all right set of people. And what I've been seeing that, Kumar Viswas has got the preferential at the 328. And after that, that price has never come up in last 2 months.
Yeah, Kumar Vishwas, that Kavi Raj.
Yes. And even Kumar Viswas' brother-in-law has been into the board of director as well. So when they have gone to the preferential shares. They only issue to the Kumar Viswas. It's a big amount of share. I don't remember the number, but
It's
it's
a
a very
1%,
big.
sir. It's not more than 1%.
Yes, but all 328 and only 1% Kumar Viswas. And after that, that price has never come up.
Okay.
Yeah. Okay. Thank you. I think I'll keep an eye. Yes.
And they also took a lot of people on their board, like, director, advisors.
Yes. And I think they have hired
they-
recently 30 years or 40 years one senior IS officer who has been an amazing track record or one of the
You are
highest
right.
professional in the world.
You are absolutely right. He is based out of Chennai.
Yes.
He was one time investor or advisor to Titan as well.
Right. And even I think some of the from government who was minister, he's a part of that, consulting of kind of this company. So under his mentorship, this company has been developing. I just forgot the name of the someone from the cabinet meeting in the past.
Sir, in India, you know how the things works.
Yes.
We don't need to tell this. That gentleman name is Mr. Dr. Rajiv Rajan. He is the Chief Secretary of Tamil Nadu.
Yeah. One more question is on what about quarterly results? So Sudhakar ji, it's a SME company, so they
Yes.
need to publish in 6 months basically.
But we requested management to have this at least some updates on the quarterly basis in terms of presentation, or at least some guidelines like what's happening around.
Okay. Any more questions for Pankaj?
I think I recommend and I suggest, please go through their recent EGM where all these guidelines and all the details about the BSS industry as presented. I am also trying to study this BSS as a whole, but I think I suggest you please go through that.
Okay. Yeah. Okay, so let's move to the next presentation. Thanks, Pankaj, for this.
Thank you, sir.
So we'll move to Pramod.
Everyone, am I audible?
Suraj, if you want to
Yes.
add, you can talk. Suraj.
Yeah, we'll move to the next one now, Pankaj ji.
Okay, no problem.
Okay, yeah. So before Pramod, you start, just stay, guys, audience online. One audience poll is there after this, and then presenters poll as well. So just stay on course. Yeah, floors is yours, Pramod.
Yeah. Good morning, everyone. Am I audible?
Yes, you are.
I hope the screen is also visible now.
Yep.
So the company I'm presenting is a company which is across the globe, serving the customers and the industries, both domestic as well as across the world. Wide array of industries like renewable energy, wind and hydro, industrials, including the agricultural equipments, construction, mining, electrical, automation, faster distribution, general industry, as well as infra. Mobility like railways, metro, as well as the automotive industry. It's basically a precision engineering, and to be more precise, the precision components which they manufacture. It is a company which is operating for more than 30 years now, 175 plus good customers, 750 plus SKUs, that is the billable products which they have, exporting to 25 plus countries. In one of their domain, they have a 70% market share and high quality standards with good certification. For the last 5 years, revenue CAGR is 23%, EBITDA CAGR of 36%, PAT CAGR of 84%. This is a company which is listed in the main segment in both NSE as well as the BSE, and the current market cap is 1030 rupees, that is just about 1000 crore. The IPO came just last year, around 11 months back in September 2024. It was among the India's top 5 IPOs of that year, and the subscription was 201x. So this is the logo of the precision engineering company. Any guesses? So the company I'm presenting is Gala Precision Engineering. Coming to the company overview, it is a renowned and preferred manufacturer of precision components in India. It is supported by an experienced management team and a diverse skill workforce driving consistent financial growth, operational efficiency, and high levels of repeat business from the customers. It is a leading manufacturer of special fastening solutions like high tensile fasteners, the disc and strip strings, as well as the spiral springs. It is exporting to more than 25 countries with an office in Germany and revenue contribution of 38% from the exports. It has the state-of-the-art manufacturing facilities, complemented by in-house tool design and development capacities, offering both scalability as well as flexibility, providing comprehensive solutions to the clients. Coming to the products, I'll directly jump into the products so that I can start with their products. They have three sets of product groups. That is, their core group is three groups of products. The first and foremost is the DSS, which they call the disc spring and the wedge lock washers. So you can see the picture, the disc springs, the washers, as well as the strip springs. These are very high precision components. It's not like a very regular things, which the customer, what their specification is, size, the content, the quality, based on that they manufacture and provide a niche products to the customers. So this DSS, that is a spring, the strip spring and the fastener, this is the requires the force exertion, and they offer significant spring force in the compact design, specifically designed for industrial applications, ensuring the vibration resistant joints with exceptional longevity and reliability. These are precision stamped components made from spring or stainless steel, designed to store and release energy under load. This was developed through the collaboration with the German universities, focusing on high performance and excellent fatigue life under stress. So they developed with this foreign collaboration initially, and then so they have been doing well in this segment. They provide washer, which is the Gala wedge washer, to the railways, metro, off-road vehicles, and heavy machinery, and they qualified for railways in this segment as the import substitute. So before 2018, they were these things were getting imported. Now this has qualified as an import substitute, and they've got a very good revenue from this also. One of the product innovation is the grip lock washer, which is a new product launched just in the last financial year for the construction equipments, further diversifying the portfolio as well as the end markets. It has various standard sizes, and it has got an online selection software for the new customers also, which allows reducing the spring size if required. With this reduced size, they can maintain the load as well as the deflection requirements as per the customer. The install capacity for this segment is 2.25 crore units, with the 85% of the current utilization rate, contributing to around 50% of the company's total revenue. The second segment, which is important, is the coil and spiral springs. These mechanical devices store potential energy made from wire twisted into a spiral shape with various steel types to meet the specific requirements. This was begun manufacturing in 2015. These solutions are used in automotive, off-highway vehicles, commercial vehicles, industrial infra. They are made from rectangular metal strips wound into flat spirals. These are the spiral springs, which are designed to store and release the rotational energy as torque. These offer the high durability, optimal space efficiency, various surface treatments, and cost options while meeting the strict tolerances. The installed capacity for this around 2 crore 10 lakh units with a 78% utilization rate and contributing around 21% of the last year financial revenue. The third important segment for this company is the SFS, or the Special Fastening Solutions. This is the newer one added as the segment, and this is what the company is focusing more, like anchor bolts, studs, and the nuts. These are the hardware devices used to join or affix the objects together, generally creating a non-permanent joints. It manufactures custom-made fasteners like studs, anchor bolts, and nuts used in industries such as renewable energy, railways, off-highway vehicles, electrical and heavy machinery. 15% market share already in the domestic SFS segment for the wind turbine segment. So this has an installed capacity of 4.2 lakh units as of now, with a capacity utilization of 70%. So these three are the main segment which the company is in. The company has the product breakup around 50% in the DSS, 20% in the coil spring, and around 30% in the special fastener segment. Coming to the industry revenue breakup which they cater to, the industrial segment around 33%, renewable around 39%, So mobility around 28%. So they have been well diversified across all the sectors, which no contribute, like with no, what I can say, good diversification across the segments. Coming to the total addressable market, these are the various industries which they are able to address the market. The raw materials, mainly the steel sheets, steel rods, steel wires, they are locally sourced from the adjacent areas. Some of the companies, especially the exports, they have the requirement of buying from the particular company, even from the imported from the Europe also. They have the quality standards, like for India, they take from the BIS standard companies. From the outside, they take from the company which the client they want it to be bought from. So some of the raw material they source from outside the India also. Coming to the clients, they have a marquee client list. In the renewable energy, they have Vestas, GE Vernova, Enercon, Senvion, Regal, and Rexnord. So all these are both domestically and internationally renowned companies. In the industrial segment, they have Schneider Electric, L&T, John Deere, Worth, Legrand, LPS, Bufab, and in mobility segment also Stifler and other important companies. In addition to this, for the Indian Railways, they are the approved supplier for locomotives and coaches, and even for the metro train segment also. Not just the marquee clients, the main thing, the good thing about this company, which I like, is the stickiness of these companies. Most of these companies have been associated with the last 5 to 18 years. So this is as per the last year annual report. So once they reach out to a company, they usually, for any new product, it takes 9 months to 20 months for the company for it to audit their the product, and if wanted, they come to the plant also to assess and audit. And once they're satisfied, usually the process takes 9 to 20 months as per the management. So once they provide and they start supplying, the most of the clients are very happy and they're very sticky. In fact, in the con call, the management says it is easier to sell new components to the existing clients rather than to find a new client. So that way they have been able to satisfy the clients with a good margin, like revenue, and the margin they're still able to maintain and still able to have the client sticky and supply more products to them. Coming to the awards and certifications, they have got a lot of customer recognitions, a lot of awards from their customers, including good companies like ABB Endurance, and also lot of institute recognitions also, with lot of certifications and accreditations, and they are very much well, they have the standard maintenance also. And for the working conditions also, they have a lot of, in the last 3 years, the great place to work, the certificates from the appropriate authorities also. Coming to the geographical presence, they have the corporate office in Mumbai. They have the existing, whatever the last year revenue I spoke about, or the brief identification I have given or about to speak, is from the main existing factory from Wada near Mumbai. The second factory, which is already done and commercialized in this month. The second factory is in near Chennai. They have the one office in the Europe, in Germany, to cater to the clients in the Europe as well as the US. They have one representative in US also to cater for the North America. So for the geographical sales share, 65% is domestic focused. So for a manufacturing company, this is a good number, 65%. They are catering for the domestic. For the rest 35%, 19% is to Europe, 12% is to North America, and 4% is rest of the world, including the East Asian countries. Coming to the journey so far, I will not go into detail. One thing which is very commendable and which I like about this company is, once they started in 1989, they started just trying to get the clients in their products and try to improvise their products. So as they got good clientele, slowly they studied the market and where they can access the products which are in the same group with not much diversification, but related products, and which have a higher market share in both the domestic as well as the global market. So this is the second thing which I liked about the company. So after 1989 till 2013, they were mainly with the DSS component, and they were improvising in that. By 2015, they ventured into the second segment because they realized the market share or the total addressable market, sorry, not the market share, but the total market which is available in the domestic is 4 times the DSS segment and almost 100x the CSS segment. So they ventured into the second segment, which has a higher global market as well as domestic market. Still, the company feels for this second segment of CSS, the springs, they are mainly domestic focused and not much into export focused as of now. So this is where they ventured in 2015. So next, over the period of next 3 years, they entered into the third segment because they saw that market share, the market availability or the accessible market is 15 times more than the previous segment in the domestic segment, whereas in the global market it is much more higher. So almost we can see here the local for the first segment, the around 89 crores is the global market, but this segment it is almost 9,726 crores. So almost 100x jump of the available market, addressable market. So with the existing customers and also onboarding of new customers, they have been able to sell in these segments with a good revenue and a good margin also. Second thing is, so with time they had the Indian Railways and the Metro also as a import substitutes. They also got away by selling some of the like surface engineering solutions which were not suitable or which they thought they could not progress. So some of the components or some of the industry which they were catering to, some products they sold out. So coming to this one next, recently 2024 they got listed into BSE and NSE as the main platform, and 2025 they have come up with the commissioning of the second plant. Coming to the promoters and the management, the chairman is Mr. Kirit Gala, and he is in mechanical engineering, and he is into marketing also. He's done the degree, and he speaks on to various topics in the industry. This is the board of directors, which are very well qualified, and some of them are from IIT Bombay also. So once we have spoken about the clientele as well as the products, so they have the manufacturing facilities at two places. The first and the existing one is in the Wada plant near the Mumbai. It has been the land area is around 28,800 square meters. A lot of areas still available for brownfield expansion. And the second plant which they have come up with is in the Vallam plant near Sriperumbudur near Chennai in Tamil Nadu. So this has also a large square area of around 6,718 square meters. This has been commercial. The last quarter, that is the Q4 25, the clients have shared the audit, and multiple trial runs have already done, and then they have started the Q1. They have started the production, and the commercialized to add on to the revenue. It will start from the next quarter from the Q2. So in these the factories, they have a lot of in-house manufacturing capabilities, tool design development, blanking and forming, coiling, heat treatment, short peening, grinding, thread rolling, CNC machining. So most of the works required for the manufacturing components, they have in-house machinery. Some of the things they outsource nearby in nearby their plants and get the work done. So this strategic expansion, the capacities and the capacity relation which already spoke is with the existing plant in the Wada, Mumbai, and whatever the revenue are going to add on is from the brownfield expansion in the Mumbai part, that is Wada, the primary site, as well as the second Chennai plant. So this revenue accreditation is the third part which I'm looking in this company. So that is going to add on from the next quarter. So basically the last year capex proceeds has been put for these two plants for the expansion. So the management says why they came up with the second plant in Chennai, because they wanted to be with the close to the proximity to the customers. They had local job work vendors suitable for their work, and nearby suppliers also available for the raw material procurement. So this is with the factories which they have. So with the funding IPO, they raised around 167 crores. It was a fresh issue of 135 crores and offer for sale from the promoter around 32 crores. Came up with the issue price of 529 issue price with a face value of 10 rupees. This is the current utilization which the management has clearly utilized without any deviation, what they came up with. Around out of 135 crore which came into the company after the expenses, 121.25 crore came into the company. In the first phase of utilization in the last 1 year, they have put money into both the factories. They have given the breakup. I won't go into the detail. This we can anyway have in the presentation later. They have two FDs created with the whatever amount they have left over for the next year utilization from this IPO proceed in HDFC Bank as well as S Bank. So with this, they had some amount of they cleared their long-term debt payment, 45 crores, what they initially intended fully they have repaid. Based on these FDs which they have kept, they have taken overdraft facility in these two banks, and the CRISIL rating for these two is CRISIL A2 as well as BBB plus positive. So they are maintaining a very good rating also. Coming to the shareholding pattern, post IPO, now the current promoter holding is around 55.3%. DII is around 4.6%. FII is around 1.1%, and public is around 38%. If you see the last 1 year, there is slight decrease in the FII from 2.3 to 1.1% holding. DI, there is Nugent underscored value fund and Mauryan First. It also currently is around 2.34%. So it is standard, like there is no much decrease, but some of the other DIs have already exited. Public shareholding is quite same. It's not that the exiting shareholders they are dumped on the public. It is around 36 to 38%, maintaining almost same. Number of shareholders also drastically not increase. So there is not much worrying sign in the shareholding pattern. Recently, in the last, that is Q1, last month, June 2025, the promoter bought close to around 1 crore worth of shares. So it's a small amount, but definitely adds on to the confidence in the company. Coming to the profit loss statement, it has always been a net profit making company. For the last 5 years, sales has grown much. Coming to the last year, 2024, it was 203 crores, and last year it was around 238 crores. The operating profit margin has recently has been for the last 3 years around 17 to 19%. Coming to the profit, it is around 27 crores, and the EPS is around 20 to 21 crores. The company is in a growing phase, so it is not giving the dividend as of now, which I also feel is a prudent way by the management to infuse into the growth of the company. Coming to the balance sheet, the equity capital and the reserves has been increasing. The long-term borrowings is just 1 crore. It is negligible. Short-term borrowings is only 22 crores. Other than that, the assets has been increasing. Inventory and trade receivables have been increasing just like any other manufacturing company, but it is quite under control. Coming to the cash flow statement, it has been the operating cash flow has been positive, but in a marginal way. Receivables and inventory is slightly on the higher side. 23 crores of receivables and inventory of 14 crores in the last financial year. In addition to that, if you see the working capital cycle, it has been maintained for the last 4 to 5 years. But in the recent FY25, there is an increase in the working capital cycle. Though in the con call, the management gives explanation for this. It is due to two factors. One is increase in the receivable days as well as increase in the inventory days. Why increase in the inventory receivable days is because of the debtor days rose from 85 to 195 days, which is quite significant. It was mainly from a US export customer which had a higher credit period. So that was one reason. And second reason was the year-end goods in transit, which led to the higher receivables. Second is due to higher inventory because of the days increase by 5 to 6 days because it was built for the Q1 and Q2 FY26 demand, which it was expecting. So it led to the higher inventory. So the management expects this to going on to stabilize or to come down. Net worth has been increasing every financial year. So except for the last year, the working capital days, which is increased, and slight decrease in the ROE and ROCE, but it also has been in the stable stage. Coming to the recent Q1 FY26 results, as with any other manufacturing company's results which we saw in this Q1, year on year there has been a good growth, that is around 18% in the sales, but a decrease in the quarter on quarter, and which is the expected for this kind of company. So the revenue is 63 crores, 18% growth. Operating profit margin was less, 15%. PAT margin was also slightly less on 10%, and EPS was around 5 rupees. So quarter on quarters there was degrowth, but year on year in the revenue it was quite good. Margin was slightly less. So this is about the financials of the company. So coming to the further going ahead, how the management is focusing. We have seen historically they have been got a very good hold of the industry overview. So they are looking into the industries further how to proceed. Right now they are into sticking into the three segments for future, but they are open to other segments without much diversification. They want to stay within there.
Sir, ice cream. Strawberry ice cream.
So they want to stay with the respect there, the core capabilities. So this is the upper part is what we already showed before. So this is the industry lattice network figures which they came up with the report. So for the DSS segment for the domestic and global, the market size is going to increase for the next 3 years at a CAGR of 6 to 6.6%. For the second component, that is the spring segment, which the management says they're focusing currently mainly on the domestic market, the CAGR expected for next 3 years is 9.8%. For the special fastening solutions, the global market share is expected to rise 6.7% and domestic market share is expected to rise by 18%. This for the next 3 years by the Industry Lattice Network report. So this is what the management is looking at to and trying to increase their market share. So what are the growth drivers? I don't want to go in detail of this. We can read later in the which the Punisar is going to provide at the end. So there are a lot of growth drivers in the industry as well. The manufacture, infra, steel demand, passenger vehicle, metro, railways. Government domestically is focusing a lot. Globally also, we know that renewable energy, wind, solar, lot of growth drivers, PLI scheme, urban infra. So all this, there is a lot of growth drivers for the company, which the company is very much focused and ready to jump in to acquire a greater market share. And these are the industry value which was there in 2023 and based the market, the value in terms of the money. And this is the growth rate projected for the next 3 years. So we are looking at a very good market for the next 3 years at least. That is what the market is, the management is also focusing at. So the future growth strategies from the company itself is to strengthen the core capabilities in the precision engineering for the sustainability, moving up the value chain from niche markets to large addressable markets, leverage on the in-house design and development capabilities to grow our product offerings and capitalize on the future trends which are always on a lookout. To strengthen the relationships with our existing customers and expand the customer base, expand the manufacturing capacity at our existing facilities by brownfield, and set up additional strategically located facility. The key competitive strengths of the company: well-established manufacturer of the precision components with diversified product portfolio and diverse market, long-standing sticky customer relationship with both Indian and global OEM and tier 1 players, well-equipped manufacturing facilities along with in-house design and other capacities which offer scale, flexibility, and comprehensive solutions, experienced management team supported by large, diverse, and skilled workforce, track record of consistent financial growth and performance characterized by operational efficiency and very high repeat business. So the fourth thing which I liked about this company is the product innovation and new launches. The company is meeting the customers on a regular basis, coming up with what they want, what is their need, how can they substitute their existing customers or cater to their new requirements. So the grip lock washer was the last year their new product launched by them and has got a very good response. The very current Q1, the last 3 months back, they came up with a new product called the seat retractor rings. So the company has completed internal testing and submitted the samples to the tier 1 customers already. Customer has conducted the full-fledged testing and OEM approval is pending. The addressable market for this new product is rupees 20 crore annually in India, just for this customer only. And there's a global demand of 5 to 7 times in the global market. For this, the product, there is only one significant competitor in India, which is a German MNC, which has the Bangalore plant that is a kern labor, which is of the higher quality and a real competitive for this segment. The ramp up is expected to be gradual for this product because of the safety critical nature. So it may take even up to 20 months also to get the commercialization of this product. So companies always look out for product innovation and new launches, which is a good sign. So some of the snippets from the last two recent con calls. The future expansion, the company is very clear. Existing water plant, brownfield like expansion, lot of place available. Second plant, newly commercialized. All the customer audits has been done. They started supplying from the Q1 and it will add on to the Q2 from the revenue part. So the overall capacity, in these two expansion from the IPO funds, the company has put money in two levels. Last year as a phase one they have put, and over the next 1.5 years they want to put as a phase two. So the company has given a very good picture how much they have spent, how much they are going to spend on that, and they have stuck to what their management, the initial what they came up with. So with the completion of the first phase of the expansion in both these factories, the new plant in Chennai is expected to add on 30 crores to the revenue. And from the water plant, the existing plant, the total revenue is going to be 270 crores. So around 300 crores is what the company is expecting for the current FY26. Combined Wada and Chennai peak revenue capacity after the phase 2 expansion, which is going to happen, it is expected to 425 to 450 crore based on the current prices, and it is going to happen probably in the next 2 financial years, that is by FY27. Company has a land search underway for the future capacity expansion also. It has clientele just like any manufacturing company in the Chennai, that's at south, Maharashtra region and the Gujarat region. So current capacity is sufficient for the next 1.5 to 2 years of growth. Company is on lookout for the third expansion phase for over a period of next 2 years, not in a hurry as of now. Company has inorganic opportunities under evaluation also, and funding for the inorganic opportunities, they have not decided. But for the third phase, probably they feel that with the revenue growing from these two plants, they should be able to get maximum from the internal accruals itself. Company is very clear which segments which it wants to go. They have no current plans to enter organically the defense and aerospace segments, even though that is the current flair of the market. Coming to the order book and competitive landscape, order book at the current quarter end is only 70 crores, but the company is not in a segment where it gets a huge order book. It is typically like it already has existing clients. They get the order, it will get executed over 3 to 4 months. Regular monthly schedules they get from their customers in addition to this existing order book. So the client stickiness and product criticality is what the management reiterates in every con call. Normally the customers do not change the sources so easily. Coming to the raw material sources and import dependency, imported raw materials in FY25 imports were 7% of the raw material volume and around 18% by value, mainly for the special and high grade materials which are not available in India, like Inconel for disc springs, specific steel wires, and as per the customer requirements. Main suppliers for this company are Indian like Usha P Engineering, imported from the Kiss Wire company. Strategy are their ongoing efforts to develop Indian sources and to reduce the import dependency. Coming to the landscape, their peers are their competitors. For the fasteners in US segment, main competitors they compete with Germany, Norway, Denmark, and UK companies, and not from the Indian companies. For the coil springs, for the Japanese companies. For the disc springs in the niche product, the competition is from US, Europe, and China. And in this segment, this Gala is ranked number 1 in domestically and globally number 3. So pricing wise also they have a price advantage of 15 to 18% over German competitors in exports, and has a slightly more 3 to 4% in the Indian market compared to their peers like Harsha Engineers, Sterling Tools. These are their competitors, and the Sundaram Fasteners. So they have a well-placed strategy with a strong focus on technical capabilities and customized solutions for OEMs to cater for this competitive landscape. Coming to the growth guidance, management has been maintaining for the last 1 year that they'll be able to maintain 20% year-on-year mid to long-term revenue growth target with EBITDA margins of 17 to 19% and a PAT margin of 10 to 12%. So the management, even though is confident, they are quite conservative in their tone, and this they say conservative they will be able to achieve. For the FY26, with the onset of new plant, they are expecting slightly higher revenue growth up to 25%. And the forward guidance, the gross margin is expected to be 58 to 60%. Raw material cost ratio is expected to continue at the same ratio of 40 to 45% of this total revenue. Based on this conservative estimate, the expected revenue, this is what I have come up with. So probably we can expect 285 to 300 crore revenue in the next year with a PAT of 29 crore and EPS of 28 rupees. And for the next 27 by FY27, conservative estimate of 360 crore of revenue and 60 crores of EBITDA, PAT of 35 crore, EPS of 34. FY28 around up 425 plus crore of revenue, EBITDA of 85 crore and PAT of 42 crore and 40 crores of 40 rupees of EPS. So forward PE of around 3 years, PE of around 24 times. This is a very much conservative estimate, and probably this is what the management is definitely going to achieve based on the current capacity. Having said that, any manufacturing company, any business, there is always a risk and headwinds. We cannot take this estimate as a foolproof one. We have to be lookout, and for every quarter we should be looking how they perform. Coming to the risks and headwinds, the US tariff uncertainty with the current Trump administration is the main risk as of now. Last time at the time of Q1 con call, the import duty was increased to 25%, later which he made 50%. Probably now again with Putin and Trump meeting, probably it is expected to go back to 25%. So this introduces near-term uncertainty. Management is monitoring and may adjust the pricing if required. The management has not seen any excessive buying by the customers just on the fear of the tariffs. So there is no evidence of Q4 pre-buying, or there is on the other hand, there is no slowdown also because the tariff changes. Orders they are getting as per plan. There is not much changes as of now. There is always a export mix volatility. US market share may be volatile with respect to the resolution of tariff or penalty by the Trump government. So that one. EBITDA volatility has been there a little bit, especially in the last quarter. Impact of the forex revaluation. It is more of a accounting this thing which will get re-added at this financial year. Management expects the reversal or normalization in the subsequent quarters by the accounting. Management has got a focused or already a forex hedging the idea. For the sales for US, for the Europe, they're hedging 65 to 70% of their sales. For the US, the dollar, they're not hedging currently, but they have been able to manage that. For the raw material wise, they're not hedging, and they say they can pass on any rise or decrease to the customers because they have a long sticky customer relationship. Coming to the last risk, which is the ramp up risk. So the new products like seed retractor spring, they have a long, slow validation cycle, safety critical nature. So they may take up the ramp up thing also. Coming to the execution of the expansion plan, the second plant is as per plan. In fact, they opened 2 months earlier than what they expected. Coming to the final slide. So the fundamentally, it's a market cap of just about 1000 crore. That is 1030 crore market cap. Current market price is 810. The high it reached around 1481 rupees and low is 680 rupees in this financial year, in the last 1 year. Currently available at PE of 37.8. There is no long-term debt, just around 1 crore of long-term debt. That's why the debt to equity is around 0.09, which is very, very good. PEG ratio is 0.66, which is again very good. Current ROA is 15%, expected to increase. ROC is around 17%. Return on assets 10.6%. And the asset turns has been increasing. In the Q3 last year, it was 2.95. Q1, it was 3.05. That is Q4 3.05, and in Q1 FY26 it is 3.65 times. So the management efficiency is also on the increase, and it is going to maintain this good efficiency. Coming to the technical chart, it has been in the consolidation phase for the last, at least from January 2025. It is currently below the 50 as well as the 20 moving average, the price. It is just in a triangle pattern going down. If it comes to anywhere around 765, I feel it is a very good price. Chances of going down might be less if there is no other new untoward black swan event with respect to the company. But technically, if it comes about this consolidation, say about 917, and with a good volume, if it comes up, it will be good to enter technically. Fundamentally, yes, the new plants is going to add to the revenue. We can always monitor the quarterly revenue with the, as per the management tag, if the company is performing, definitely worth the company to be entered based on this technical as well as the financial parameters. So thank you.
Thank you, Pramod. So, one question from my side before we jump into the audience question. So, I feel there's something lacking in the company in terms of price action from quite some time, right? So, what could be the trigger as per you? The price
You mean
action,
the current
price
market
action.
price?
Yeah. So, if you see last 3 years almost, it's almost not 3 years possible. It is.
No, the company came with just 11 months back with the
Yeah,
IPO.
yeah, 1 month. Oh, sorry, 1 year. So in one
Yeah,
year,
yeah.
almost the price action
So
doesn't
almost from
have
the
increased.
January.
Yep.
So it came with IPO in September around 519 rupees, listed at a higher price, went up to 1480 in December end. From January, it has been on the downtrend, reached low around May. So after that, it has been consolidating. So
Okay.
whatever the company has come up in the public domain, there is no much of a uh, price why it is consolidating. Probably the market is not seeing much of a growth compared to other the companies which are currently available to enter into. That's what I feel. Company is giving a conservative growth estimate of around 20% in the long run. So probably the market might be looking at other companies which might be giving it higher growth expectations.
Yeah, and historically, if we see, it's around 18% only. So I think the company is reasonable, and I'm happy that management is transparent that way. They are not putting unwanted expectations towards the growth cycle. So 18 to 20% is a reasonable number, which is also justified by the historical numbers.
Yeah.
Okay, so other thing is some of the, I think, family promoters are possibly into the public shareholdings. So do you think they are promoters or they're just relatives? Any idea about that?
They are the family, the relatives. I am not sure about, but they have the same surname. So probably the children, brothers, probably the family, they are holding the public also.
Mhm. But definitely, I think precision engineering is one of the trends which is catching up, and sooner or later, precision engineering is what we want in India for manufacturing.
Yeah.
So it's a good company that way, but looks like to be little bit on the, I would say, above the fair value as per me at this point of time.
Yeah.
But definitely, I would love to learn more about it. Okay, let's go to the audience. Any questions from audience to Pramod? You can put in the chat also in case. In the meantime, I will just put this ratings for the presenters. It should appear on your screen. Just check it if you are able to see it on your screen and rate the presenters. Can somebody confirm? It is showing up on the screen.
Yeah, it's visible.
Yeah. So can you guys just put the ratings for the people? And after that, I will put on the audience poll as well. And in the meantime, somebody has a question for Pramod. Just keep on adding into the chat.
So where is the rating link, Pune?
It should be on the screen actually for everyone. I see some people have put it also.
I'm not sure. Means I don't see something.
Purit Ammar here. I can see the poll, but it doesn't give me option to hit. I can see
Uh,
options and all.
Possibly let me change you from the host. Possibly, I think that it should give you.
Okay.
Let me try that. And I am putting a Q. Okay. Just see for.
Yeah, now I get it.
Yeah. So yeah, Rishi, you have some question?
Yeah.
No,
Please go ahead.
I am not able to answer.
Hello.
Okay, for the other people who are not able to answer, I maybe put it in the chat right now. Let's see if it works out in the chat.
Yeah. Can I go with my question for the Gala precision
Yes,
thing?
yes, please go ahead.
Yeah, very well presented. I mean, good company. In fact, I've been tracking this company for quite some time now. So actually, someone in the industry actually told me to look into it, and for today's presentation, pretty much I gave me a good clarity on that. Thanks for that. First question is on the export front. So 35% around is something contributing in the export front, and of course, right now tariff being one of the high risky thing for the people who are high exposure in the export side of it. So let's say, as you said, if 15 to 16% of the price differential they have in the product side compared to the competitors in the international market. So let's say if the tariff thing increases, so are we looking any sort of, the clientele changing from our being from our client base to someone else's who might get, some sort of, price advantage there?
Uh, right now, I'm audible.
Yes.
Yeah.
So right now, as per the recent con call, the management is says that it is not seeing much changes in the industry with respect to the
Okay.
audits. Second thing is
Okay.
they say they're quite they're sticky customers. They are always open to the negotiations with the customers, and they always pass on the whatever the increase, and probably the company might bear some amount of the tariff also. That's what the management tone looks like. But having said that, even in the market share of the export market, the US is comparatively less. Europe is more.
Yes. Yep. Yep.
So that way, probably the overall in the terms of revenue, it may not be much of a significant impact as of now.
Okay. Got it. Understood. And right now, for next 2, 3 years down the line, their focus is more on the export market or the domestic market?
The Chennai plant, the company is very sure it is domestically focused. They had
Okay.
the initial first client actually was for the US only, which did the first
Okay.
audit and gave the coming up with the order with that. But
Okay.
the management is very sure that Chennai plant is mainly domestically focused. And overall, they expect this export and domestic market share in terms of sales to be in the same range.
Okay, got it, got it. Interesting. And in terms of raw material, I think most of it they are right now importing from the foreign markets, right? So any sort of increasing prices, do they get passed through to the clients, or how exactly is it? Do they have to incorporate in their cost front? Do they have to hit their margins?
See, raw material actually import is very, very much less. In the last financial year, by volume, it was only 7% of the total raw material. Import was only 7%.
Okay.
But by value wise, it was close to 18% because one, some
Mm.
of them is not available locally. Some of them, the client themselves, specifically, they want to be important from that particular companies. So they have been
Okay.
able to pass on the cost to the customers without any hassles till now. So import is not much, and company is always on a lookout for the import substitute also in the locally available market also.
Okay, got it, got it. And
नंतर झोपा आता हँडवॉश करूया
also in terms
ते काढ
of
जरा
the
फ्रॉक काढ हा मग हँडवॉश करूया ना चांगलं छान छान वॉश करूया अंघोळ करायची ना तुला
hello,
हा, गरम काल गरम काल कुठे
hello.
काल माती काढू
Yeah. Also in terms of so you said that the new facility that is Chennai plant, that will be operational by the next quarter, right? Or is it the expansion phase that are they taken in the current facility? Hello.
Pramod, I think you are on mute. Pramod?
Yeah. So the Chennai plant, already the phase one has already been completed. The
Okay.
Q4, they already and this Q1, they already started the production. And it is
Okay.
going to add on to the revenue by Q2 itself. So the capacity utilization is going to increase. Probably by this financial year, they should be having a good utilization of the phase one, the expansion. Phase two, they have land and they have they dedicated the amount also from the IPO proceed for the phase two expansion, which will be done in the next year. So the phase one expansion in the Chennai is already done and it is already started the production this quarter.
Okay. And what about the current facility that they are expanding? What's on that front?
So that's what the current factory, main factory is in Wada near Mumbai. So it is also having a lot of space, and with the IPO proceed, they also put money for the expansion on the brownfield side. So that also phase
Okay.
one they have done, and they have very clear cut as of now the what all the segments they're going to manufacture from the expansion from these the Wada expansion. All the three they're going to expand. The mainly in the Chennai branch they're going to give mainly for the SFS segment and so this is what they're saying.
Okay, perfect. Got it. Just last question. On the competitive landscape, who will be the close competition for them if at all I want to compare them for this company?
Basically, the company says for their international market, they compete mainly with Europeans.
Okay.
Four countries they say. So because they
Okay.
have a good precision equipment, they
Yeah.
say it is on the export side, it is the foreign competitors from mainly from the Europe. From the
Yeah. Yeah.
for the domestic one, it is like Sundaram Fasteners, Sterling Tools, Shasha Engineers.
Okay.
Yeah,
Got it. Yeah. Thanks. Thank you so much for the answering questions, sir.
yeah, welcome.
Okay, next is on the audience poll. So you might have seen now questions on the screen for the different companies. So please confirm me once you are able to see that on the screen.
Yeah, Puneet, we can see.
Yeah. So this audience poll would be possibly showing the answers to all of you at the same time, right? Once you select the answers from your side, it will show the correct answer. I'm just trying to check whether it is working fine or not. So those who have already attempted, they want to drop off, they can drop off. And we have the next session on next Sunday, similar time, 9:50 a.m. around. So start joining around that time only. So next week is also 5 presentations from different sectors. So we have tried to make sure that all are coming from different sectors, possibly all 10 presentations. Okay, thank you all the presenters, and people who have done it, they can log off or drop off. I will be closing the poll in next 1 minute.
Thanks a lot, Puniji, to organize such an amazing session. And thank you to all the presenters. I look forward to join the second session. Thank you.
Thanks, Rajesh. Bye. Okay, I will be closing the session now. Thanks all.